Hello? Hello? Hello, hello? Good morning, everyone, and welcome, and please take your seats. We have an exciting day ahead of us, and we'd like to get started. I was a bit worried about 15 minutes ago. I was looking around the room, and there were about 10 of us in here, and I was thinking, oh my gosh, we're all dressed up and ready to go, and no one came to our party. And then I went out into the reception area, and that's where you all were, of course, greeting each other and getting started. So pleased to have everyone with us today. My name is Andy White, and I'm the coordinator of the Rights and Resources Initiative. We're one of the 3 co-organizers of this event. My colleague Francesco Martoni from the Forest Peoples Program is another co-organizer. He'll make a few comments after I do. And then my colleague Michael Jenkins is from Forest Trends. They're the other co-organizers. And Michael will give kind of wrap-up comments at the very end. Before I proceed with describing what we have ahead of us today, a few little announcements. This conference and this discussion is carried live on the internet, so what I'm saying now to you will be forever recorded in history, and we all have to, some of us might be thoughtful about that. And also the meeting today is being translated. We're very fortunate to have a wonderful team of translators who are working away in the back room. And also the proceedings will be prepared by IISD and available on the web afterwards. So if you need translation, English is on channel 4, French is on channel 5, and Spanish is on channel 6. So we have a great lineup today and a great set of participants, you who have lots of experience in this arena, and we're eager to get started. So my job now is to introduce the day, the panels and the themes, and then again I'm going to hand over to my colleague Francesco, who will give some opening remarks from his perspective. As you know, our purpose today is to discuss the state of forest finance and in this arena of climate change. And it's to kind of take stock of where we are, what we've learned, and what are some of the promising paths forward. We're about 4 years or so, give or take a year, depending on how you count, into this red business. And now is an appropriate time to kind of take stock and see where we are. If there's mid-course corrections that we should all be considering. And of course, there's some important meetings coming up next week in Berlin and a few months down the road in Durban. So now is a good time to see what we should be learning and reconsidering and how to move forward. We have 3 panels today to help us do that, plus the comments of Minister Greg Barker. He's the Minister of the Department of Energy and Climate Change here in the UK. And of course, the British government has been a leading government in the world on climate change and on REDD in particular. So it'll be very interesting for us to hear what he has to say. That will be right after lunch. The first panel will be chaired by Frances Seymour. We're here, as I'm sure she's well known to you. She's the Director General of CIFOR, the world's leading forest research institute in developing countries. And she's going to chair a panel that will focus on the state of finance, the carbon market, public funds. Is the market there, or is it not there? Is it growing? Is it not growing? And where do we go from here? And we have a great set of panelists that she'll introduce in just a few minutes. The second panel will be chaired by Jan McAlpin. And Jan was over here somewhere. She'll be, oh, there she is in the back. I will introduce her more fully later. She's the director of the UN Forum on Forests, another well-known name, long active in this arena, and it's a great pleasure to have Jan with us here. And that panel will focus more on kind of the implementation side, what's happening on the ground, and what are the emerging perspectives of indigenous peoples, of project developers, and what are we learning again. And there too we have a great lineup of speakers from diverse perspectives. The third and the last panel of the day will be chaired by Peter Riggs. Peter's right here in front of me. Peter is with the Ford Foundation out of New York, been in this arena for a long time, as well as in the agricultural arena and trade. We're very fortunate to have Peter with us, and he's going to lead the last panel, which will focus on kind of what's the next generation of ideas. What's promising out there. And there too we have a great lineup. So to end, let me make the bold assumption that there's a few things that all of us in the room probably do not agree on. There's probably disagreement in the room about whether the market, the carbon market, is a good idea or a bad idea, whether it's going to work at the scale necessary or not, whether indigenous people's rights should be recognized unequivocally or whether they should be negotiated. There's probably a few legitimate disagreements in the room today. But I would venture to say that there's a lot more that we probably do agree on. And I think one of those points of agreement is that things have not worked out like many of us had hoped in the climate arena. Most scientists now think that we're going to 4 degrees, if not more, unless there's dramatic action taken in the short term, and I don't think any of us think that that's likely to happen. No action in the U.S. And none likely in the future, and on the international level, not looking too rosy for Durban either. And we're already witnessing kind of the long-predicted uptick in floods and droughts and fires and disasters, particularly on the poor developing countries, people that are least able to withstand those kinds of disasters. So if the first big idea of a global carbon market is not going to work out to the scale or at the speed anticipated, then we need to find some other solutions and find them fast. And I think that will be a point of discussion for today. But to do this, to find new solutions and come to some agreement about them, is going to require some candid and constructive conversations. And that's what I hope for today, candid and constructive conversation. And I think that's been a hallmark of these dialogues that we've been fortunate to be able to convene over the last few years. Candid, constructive, and solutions-oriented. So I look forward to your active participation today. That's another hallmark of how we do things. We'll have panelists that will speak, give short statements, 5 minutes or so, and then we'll have, we're fortunate to have great chairs who will not just be timekeepers, but active kind of instigators of a conversation. So we look forward to your participation in that conversation. I think that's it for me. Thank you very much, and I'd like to introduce Francisco Martone, my colleague from the Forest Peoples Program. We're very fortunate to co-organize this discussion with.
Thank you. Thank you, Andy. My name is Francesco Martone. Thank you for giving us the first outline of what this day will be looking like for all of us. My name is Francesco Martone. I'm a Senior Policy Advisor with Forest Peoples Program. My job has been to follow all the international negotiations on REDD at different levels, from UN REDD to SCPF to UNFCCC. And I'm very pleased to have been able to share some initial thoughts with you today. I'll be reading because I'm still having some jet lag. I don't want to get lost in what I have to say. Anyway, so I'm really wishing you all a positive and fruitful exchange today on an important issue such as REDD+ finance that is very critical to any mitigation action in forests. We are here, as Andy said, to try and open the space for a fruitful dialogue, to exchange options, to explore opportunities, to share critical thoughts about issues that are still very controversial, such as, for instance, carbon trading and carbon markets, that for many are considered to be false solutions to climate change. We want to discuss what are the key preconditions that we need to ensure that REDD+ result in an opportunity and not in a threat for indigenous peoples, for their rights, and to social and environmental integrity. We do believe that, hence, beyond a mere focus on which kind of sources of financing should be explored and used, the debate needs to shift to define how to implement an enabling governance framework that would allow mitigation actions in forests to deliver their potentials while preventing social and environmental risks. Those of us, some of us in this audience, were in Panama last week in the UNFCCC preparatory session before Durban, and we could take note of some important developments in the REDD debate. First and foremost, there was clear recognition of the fact that when you talk about results-based payments, you need to go beyond the concept of carbon when you define results, and you have to include non-carbon values to have an holistic approach to forest and mitigation that would include also poverty alleviation and sustainable livelihoods, and that would add on the respect and recognition of rights of indigenous peoples and local communities. There's been some discussion and some convergence also on the need to open a dedicated REDD window or REDD facility in the Green Climate Fund. This is something that will be discussed in the coming months, and it will be having an impact also on the discussion we'll be having here today in terms of what would be the institutional architecture, what would be the future of existing pilot initiatives on REDD, how do they interact with the possibility of the Green Fund having a specific REDD window. In this context today, we will hear, among others, experiences and critical thoughts and commentaries from indigenous peoples on the ground. We will hear from them about their experience in different regions and what are their key concerns. And I think it is very important. We made an effort to have them here. With many difficulties, many of them couldn't come because of visa problems. I mean, this is also what Fortress Europe, unfortunately, is all about. But some of them will be connected over Skype from Peru. Others will be here physically. And we think this is very important because this brings life, this brings reality into these discussions. And we will hear from them about their key demands for full and effective participation, to the need to ensure direct access to financing for REDD that would be developed and implemented based on their own traditional livelihoods and knowledge. We will hear from them about options to support community-based initiatives. Some of the discussion about the private sector in the past has been, well, we only see private sector as big transnational companies. Private sector can also be small-scale community-owned cooperatives, microcredit, all community-owned enterprises that could actually be potential sources of revenue, especially now that the carbon markets look like they've not been able to provide the revenue in the future for communities to pay for their conservation efforts. We'll hear from them about the need and the obligation to put their rights at the forefront, to respect their right to free, prior, and informed consent, to acknowledge and respect their rights to land, territories, and resources. There's a lot of discussion now about the need to move beyond the phased approach to REDD. REDD, the three phases would happen together. There is no need for sequencing. I want to be very clear, and we want to be very clear. We can't go ahead with REDD projects until there is a clear and solid governance framework in place at the national level that recognizes full and effective rights of indigenous peoples and local communities based on international obligations. So we think that the enabling environment has to be rights-based and has to be anchored to a solid system of accountability and compliance to social and environmental safeguards in accordance to international obligations and standards. And this discussion has to happen also when we discuss about what kind of financing and what are the preconditions for financing to deliver the expected results for REDD. Our experience on the ground shows that we are very far from having this solid compliance framework. And reality shows us also that we are in a turning point in REDD history. Looking at the world outside of this window, we see a major financial crisis, major possibilities of financial meltdown. There is a lot of mistrust and lack of confidence on the financial markets and the financial solutions to development and economy. I mean, here in Europe, we're experiencing it right now. So I think that we should allow the reality to come in our discussions as well, so that we can develop different approaches to RED that take into account the changed circumstances since the RED discussion started. Maybe we should look into a second generation RED, RED 2.0, that has to take into account that we will be facing different opportunities, but also different scenarios in the future. In this sense, I think the donor governments, like the UK government, can play a very important contribution. They can decide to support activities and actions to define and strengthen this governance framework needed to ensure that RED can be delivering good results. It's not going to be a threat. So we want to engage with them. Some of them will be here today. We want to engage with them in a very constructive dialogue to see how they can provide support for the rights of indigenous peoples, but also to governments to fully implement their commitments and respect their safeguards, but also to identify tools to support mitigation action run, owned, and developed by indigenous communities and local communities. I want to be very brief. I'm going to wrap it up, but I also wanted to thank the members of parliament that have been helping us in organizing today's event. This is a discussion here. There will be other events in our commons. And in my past experience as a member of parliament, very much engaged in human rights, development, and international relations, I always thought that parliamentarians can play an important role. There's not been so much engagement of interparliamentary networks in this discussion on RED, but since this is about governance, this is about also necessary legal reforms and political changes, there will be much more needed to ensure that there is also another space of dialogue where we can all contribute, and that can be very helpful also to define some common programs and commitments. So I think I'm done. I think this is, I just want to wish us all a very fruitful discussion, and I'm sure that from now on we can have opportunities for further exploring cooperation, exchanges, and possibly come to Durban with some new thoughts and new ideas to ensure that RED will have a different future in the coming years. And so thank you very much, and I wish you all a good work.
Good morning, and thanks to Andy and Francesco for getting us started in that productive way. It's now my job to welcome you to session 1. And we have a lineup of some of the world's best climate finance experts. And I'm not one of them, so I'm going to keep my remarks quite short. As I understand it from the organizers, the purpose of this panel is to really assess or reassess the state of play on forest carbon finance at the global level, and sort of get a sense of what different people's perceptions are of the likely trajectories of compliance markets, of pre-compliance markets, of voluntary markets, and consider the argument that maybe there really can't be a market for forest carbon at all in the traditional sense of commodities markets. And over the last couple of weeks and months, there have been a number of studies published about the state of play in global carbon and forest carbon markets in particular. And it's striking to me how these reports have a pretty interesting divergence in both tone and conclusions. As Andy has already flagged, and as the title of this session suggests, we also need to assess the changing context for forest carbon finance. In terms of the state of the UNFCCC negotiations and what is or is not likely to happen in Durban, taking into account, as Andy said, that the evidence is mounting that there is a climate crisis, but it perhaps is being overshadowed by other crises. As suggested by Francesco just now, we have multiple budget and debt crises in many of the industrialized countries that may affect politics and markets. We have increases in commodity prices of both foods and metals, which are likely to affect the economic and political drivers of deforestation and various tools we may have to deal with it. So, in summary, how does the world look different than we thought it might look 3 or 4 years ago when we started down this road? And is Francesco right that it's time to start considering a RED version 2.0? So what we're going to do in this session is to start off with a brief overview presentation that Jeffrey Hatcher of RRI has prepared. And then I will introduce the panelists and ask them to come join me up here in the front to start out with a round of brief opening remarks, and then we will open it up to discussion from the floor as well. So, Jeffrey, wherever you are, the floor is yours.
Okay, thank you, Francis. I'm not a climate finance expert either, so I'll be brief as well, I hope. What I'd like to do is flesh out a little bit of what Andy mentioned, Francesco mentioned, and Francis has mentioned. What is the state of forest climate financing, and what are the global contexts and challenges that we're facing, and how will climate finance be part of that? And hopefully be provocative for the panelists. We've got a really good panel up next, and they're coming from different perspectives, and hopefully I'll put on the table some things that all of them can identify with. I don't have the clicker. Here it is. So I'll try to do this quickly in 4 parts. First, what's this big idea? What's the big RED idea that we've all been working on over the past few years? What were some of the early concerns about RED and financing for forests and climate? And who were some of the early movers, and what have we learned from them? The second part, look at some of these crises. We all understand them to some degree, but I'd like to put them on the table for the panel. Then thirdly, what are some of the lessons that we've been learning from early implementation, and what do we know works, what do we know does not work, and can we make mid-course corrections? And then a few questions for the panel on where we go from here. So the big RED idea. Basically, we understood a while back that deforestation and forest degradation was a major source of carbon emissions, and so it's a major driver of climate change. Estimates put it at between 12 and 18% of the global greenhouse gas emissions came from deforestation, degradation, and the human interaction with a biological function. So the idea was, how can we stop people from deforesting or degrading? And economists looked at the problem and they thought, well, we can compensate people for doing something differently, and we can compensate them for the opportunity cost, the money that they'll forego by changing their behaviors. And in 2006, the Stern report put some numbers around this for one of the first times. And in the Stern report in 2006, they mentioned that a study prepared for the Stern report found that the opportunity cost of forest protection in 8 countries responsible for 70% of emissions from land use could be around $5 billion annually. In other words, if we could mobilize $5 billion and put it in the pockets of people that are deforesting or have the ability to change their behavior to stop deforestation or degradation, we might be able to make some progress. And then in 2008, the LES report, the LES review built on that, and they found that if we could deliver $17 to $33 billion per year to the forest sector between now and 2030, we might be able to have deforestation. So there was this very immediate and economic response to what was a big major global challenge. And the opportunity cost approach assumed that money was a big part of the problem and the solution. People were deforesting for economic reasons, and so we could change that dynamic. If we could make forests worth more alive than dead, we could make some progress. And there was a dominant vision that was built very quickly, saying the only way that the world can mobilize billions of dollars for forests is by harnessing the private sector, by harnessing private finance and directing it towards forest protection. But this early economic conception of what forests are and how you protect them and what we need to do going forward raised a lot of concerns. And a lot of people that had these concerns are in this room today, so I won't dwell on them. But a lot of people said the opportunity cost approach that was used to put numbers around deforestation missed the point. It wasn't reflecting the real cost that people would pay to not deforest or degrade. People were objecting to the commoditization of nature. If we put label forest as carbon and put carbon on the market, we're commoditizing a natural resource, and people were upset by that. People were saying that if we do this, we're going to just be offsetting our emissions somewhere else, and the North will get away once again. And then those that know the forests and governance of forests were saying, how are you going to dump all this money into an area where there's very weak institutions, poor governance, and are we going to be able to do this at any scale because of all these challenges that we see at a local level? Nonetheless, a lot of money and time and people's effort and lives were put into this idea of REDD. A lot of us in the room received funds from Norway, which was one of the leading governments pushing for more action to slow deforestation. And they put a lot of their political weight and financial weight behind establishing REDD funds and initiatives like the FCPF or the Amazon Fund in Brazil, or the MOU with Indonesia. And a few years ago, the FCPF and UN REDD started operations. We have Benoit Bosquet from FCPF here today. And a lot of the guidance for these programs was supposed to come from the UNFCCC negotiations. But they were moving quickly, and they were coming into problems and working to solve them. So we've got a lot of experience to learn from them. In Copenhagen, a lot of people put their hopes in the negotiations that were concluding in Copenhagen. Governments of the world came together and pledged $100 billion for climate change, adaptation, mitigation activities. And REDD was held up as one of the examples of consensus and where we can make quick gains. And so commitments for REDD total $4 to $5 billion for readiness activities, for quick start programs, through bilateral initiatives or through funds like the FCPF. At the same time, because of this political momentum and some of the financial backing by donor countries, the over-the-counter market for forest carbon grew. Last night, Forest Trends launched a report called The State of the Forest Carbon Market here in London. And what they've shown through a very interesting, rigorous analysis of reports from project developers, that the over-the-counter forest carbon market has really emerged over the past couple of years. They've shown that historically, 75 million tons of carbon dioxide equivalent have been put into project contracts, and that the value of these contracts is somewhere around $400 million. So there's been this, in the past couple of years, this big move and trial runs, we could say, in projects for REDD. But going back to what Francesca was mentioning, Andy was mentioning, Francis was mentioning, things in the world are getting worse in a lot of respects. There's a food crisis that is persistent. We see land grabbing taking place. So what does that mean for REDD as we go forward? If you look at this map, this is a map showing food insecurity and the severity of food crises. In these areas, people are hungry, and these are the same areas where there's deforestation, and these are the same areas where we're trying to mount REDD projects. So what does this mean for what we're doing? And what does the economic crisis mean for us? We have we're going through the worst global recession in the past 70 years. I'm from the United States. Big issue in the United States is debt. What are we going to do to repay all these debts? And will we have money going forward to do interesting, useful, productive things for the global society? But at the same time, we see that emerging economies have fared better during the economic crisis. And that has big implications. So a few questions emerge then. Can we maintain this level of ODA? And a lot of this ODA has been directed towards environment, towards climate change, in the wake of this economic crisis. Will there be a shift in prioritization? Will more money go towards food security programs than for environmental protection programs? Will there be a focus on production? Will that mean clearing forests to produce food? And what will emerging economies prioritize? Are they going to prioritize food? Are they going to prioritize adaptation, roads to bring their goods to market? And in the wake of this crisis, is there going to be an appetite in the developed economies for a cap-and-trade program? In the United States, the discussion is very domestic right now about jobs and employment. It's not about climate change, and it's not about producing a cap-and-trade system. The Stern report came out in 2006. The FCPF and UN Red have been working for a few years now, and we've learned some lessons over the past 5 years. We've learned that climate change is not relenting. People are suffering the effects of climate change already, and we know that emissions continue to rise. We see that there's no global cap for emissions. Copenhagen didn't produce one, Cancun didn't produce one, and so that's resulted in very little trade. And not to diminish the findings from the State of the Forest Carbon Market report, but the sum of the historically contracted carbon in the over-the-counter contracts is 75 million tons of carbon dioxide, which, if you do rough math, is equivalent to about 20 days of the land use emissions from Indonesia. So these contracts that were built over the past 10 years really are a drop in the ocean. But we've learned a lot from them. We've learned how to produce registries. We've learned how to, and I'll get to this in the next slide, what are the challenges to implementing something at a scale? We have Lou Munden here, and he's shaken up the forest crowd a bit. He wrote a report saying that the current mechanism for engaging private capital under RED, the so-called market approach, is highly likely to fail, and the forest carbon trading is unworkable as currently constructed. Lou works on markets. A lot of people have been inspired by what he's saying, and a lot of people object to what he's saying, but we'd like to hear from him in person. The same report, the State of the Forest Carbon Market report, also noted that despite the progress in projects, the projects were directed to areas where there was pretty clear land tenure rights. But we know in RRI from research that land tenure rights in most of the developing world, and in tropical forest countries in particular, land rights are not clear. So what does that mean as we go forward? They say that in circumstances where tenure or land rights remain unclear, project developers are likely to run into serious or insurmountable challenges to sustainability, to sustainably securing and marketing carbon offsets. But under the FCPF, under the UN RED program, in the bilateral initiatives from Norway, Australia, we don't see a lot of work on tenure reform, this major challenge that's been identified by project developers. And if you look at that map again, if you think about that map, those countries where there's food insecurity, where we're trying to develop RED, these are also very fragile and weak states. DRC is a major RED country. There's a lot of work being put into developing RED programs for DRC. But can we really expect them to deliver what's necessary? Alan Carsanti and Symphorian Ongolo wrote a paper saying, you know, we can't really, I mean, I'll interpret it my way, but we can't really expect much from governments in these countries to do what needs to be done to change the direction of their forest economy very quickly. At the same time, like Francis said, these forested countries are going to face massive injections of investment for infrastructure, to build roads, to build railways, and for mining. There's a projection that came out recently saying that about $25 trillion will be invested in the developing world for infrastructure projects in the next 20 years alone. That's a tremendous amount of money and would have a tremendous amount of impact. So people are asking, like Francesco mentioned, is it time for RED 2.0? People are asking, is it time to make a mid-course correction? Can we build on the momentum we've generated? Can we build on the lessons we've learned and go forward stronger? So the question is, let's go back to basics in a sense. What do we know about the drivers of deforestation? And because of so much attention to RED lately, we're seeing a more sophisticated understanding about what drives deforestation. This has been a topic of study for a long time. David Kaimowitz wrote a great analysis of the drivers of deforestation about 20 years ago. But now that forests have become part of the global discussion on climate change, it seems like we need to go back and talk about the basics one more time. We see that the agriculture crowd and the forestry crowd are talking to each other more and more, recognizing that what happens in agriculture will impact forests, and what happens in forest protection will impact agriculture. We see a greater recognition that policies can drive deforestation or slow deforestation. Policies, for example, for mining concessions that really fell outside of the forest decision-making sphere until recently. There's also the recognition that existing markets can drive deforestation. And so if we could change an existing market, for example, the wood to supply a furniture company, then we might be able to clean up that supply chain, make more efficient use of resources, do a better job with environmental sustainability, but also the human rights associated with the production of these products. Then what do we know about protecting forests and restoring them? There's been a bunch of analyses coming out. RRI sponsored one looking at 70 countries that have gone from forest losing to forest adding over the past 50 years. And what were the lessons that we could learn from those countries? We saw that it was political will and governance that provided the impetus and the incentive and the structure in which to restore degraded landscapes and start adding forests, not continue losing them. But there's also been very good, and for probably the first time in a very serious and rigorous manner, evidence showing that when tenure rights at the local level and authority to manage forests is devolved to the local level, they often do a better job at protecting forests than protected areas or state management. So I'll stop here with just two questions for the panel, and they can come up but given this context, what is the best near-term strategy to reduce forest carbon emissions and promote livelihoods, to recognize and take advantage of the fact that a lot of money and will has been put behind REDD? How can we go forward? And secondly, are there other ways besides a carbon market to leverage existing or planned investments to address the underlying drivers of deforestation? I hope I didn't go too long. I think the panelists have a lot more informed things to say than I do, but thank you very much.
Okay, let me invite the panelists to come on up, and while you're taking your seats, I'll go ahead and just give some brief introductions. First, we're going to have Benoit Bosquet. As many of you know, Benoit is the lead carbon finance specialist and coordinator of the Forest Carbon Partnership Facility in the World Bank. He previously was affiliated with the Prototype Carbon Fund and managed the Biocarbon Fund and also climate and forestry operations in Mexico and Central America. He's worked all over the world, including in Russia and Madagascar. Next up, we're going to have Michael Jenkins, who's actually three down from my right. Michael is president of Forest Trends. He also spent 10 years as associate director for the Global Security and Sustainability Program at the MacArthur Foundation. He was responsible for grant making in Latin America and the Caribbean. He also spent some time as a senior forestry advisor to the World Bank and has worked in many other incarnations, including starting out as a Peace Corps volunteer in Paraguay. Then we also have, third up will be Lou Munden, who's already been mentioned, who's an entrepreneur in technology and finance, has been a partner in various private finance ventures, using his time to design and develop algorithmic trading systems and create structured interest rate products. In the last couple of years, he has been a co-founder of the Munden Project, and he's now the chairman, and the results of his report, resulting report will be under discussion as part of this panel. Fourth up will be Matthew Wyatt, who since 2009 has been with DFID, the Department of International Development here in the UK. He is currently head of the Climate and Environment Unit there, and previously he was assistant president at IFAD in Rome. And last but not least, we will have Julio Martinez, who is the director for the Coordination of Self-Determination of Indigenous Peoples, CAPI, based in Paraguay. So we have a complete panel. Let me start out with Benoit. Benoit, tell us, what is the World Bank's assessment of the future of the compliance markets in particular, 2 weeks ago, we had Andrew Steer, the World Bank's Special Envoy for Climate Change, out in Jakarta, and he had a pretty upbeat message about what was going to be happening there. So I'm wondering the degree to which you share his optimism. How is that different than what you thought it was going to be 3 to 4 years ago? How confident are you of your current analysis? And then as a second set of questions, if you can fit it in, there's been a lot of discussion about the slow disbursement of the funds that have already been pledged and the fact that very little of that finance has been performance-based. So there's kind of a fundamental question here. Is finance really the constraint in getting RED off the ground? Benoit.
Very good. Good morning, everybody, and thank you very much to RRI for the opportunity to come here. It was actually supposed to be Andrew Steer who would be here, so Andrew was not able to travel at the last minute, and he asked me to replace him. So sorry, you're getting me instead of him, but nevertheless, I will try to offer some thoughts. I did not hear Andrew speak in Jakarta, but I have a sense of what he might have said. You know, I also sympathize with a lot of the sentiments that were voiced by Jeff in particular in his remarks. The carbon market is certainly going through a major crisis right now. What you see is a very active EU emissions trading scheme that is trading allowances within Europe. But the concerning part is that the clean development mechanism, what we call the primary market, where you see new projects being originated, has effectively evaporated. The good news, as Jeff said, and I'm sure Michael will recall, the voluntary market is growing, but it is indeed still very small. So what does that mean for RED? You know, quite frankly, I'm not sure. What I can tell you is that our experience with the Biocarbon Fund has been quite frustrating. We tried, together with the governments and the private sector companies that decided to put their money into that fund, $90 million, mind you. It wasn't billions, it was $90 million back in 2004. We've really tried to develop the clean development mechanism for forests, and it's been a long, arduous road. The rules are just very cumbersome, and there's now generally the recognition that if RED is going to happen, and if there should be rules for RED in the future, they should be really streamlined. I believe, though, that there is a need for private finance. We see ODA flows not growing or potentially decreasing in the future. I'm sure Matthew will have good news for us, and the UK will have good news for us later today. But nevertheless, let's recognize that outside of Norway's money, there isn't a whole lot of very serious money on the table right now in the range of what we are told by economists is needed. So I think private sector finance is needed. And unfortunately, too often one identifies private finance with carbon markets, but that is clearly not the case. In fact, the carbon markets are a very small part of what the private sector does. And the private sector will invest and will continue to invest and will continue to invest in infrastructure, in agriculture, in energy. So how do you then create the enabling environment that is needed, that Francesco referred to, so that this private sector investment comes and does not result in these massive land grabs, but instead helps secure the tenure and the traditional knowledge of local communities and indigenous peoples. And so I believe that RED plus finance, including from the private sector, is an opportunity to do that. I continue to be optimistic. Indeed, we need to revisit all the basics. And some of us were more or less aware of the need to revisit the basics because the issues are still the same ones. Inside the World Bank, I see my colleague Peter de Wees there in the group. We had this debate ourselves several years ago, you know, what really was the priority at the beginning of these RED Plus initiatives a few years ago. So I believe that RED Plus Finance does give us an opportunity to go back to the basics and do the right thing. We're not talking about reinventing the wheel. We're not talking about new solutions. I mean, we do know that you know, rights are important, governance is important, and all of that is true. The new opportunity, though, is performance-based payments, and I do believe that that, you know, empowers people and empowers countries once they can show that, you know, indeed they have accomplished the objective and reduced emissions. It's true that it's not all about carbon, no doubt about it, but if you cannot measure carbon emissions and verify that emissions have been reduced, you know, you're nowhere near the objective and the problem, resolving the problem. So, you know, that's what I would generally say. There's obviously a whole lot more to say about, you know, specific lessons from our initiatives or the initiatives in which the World Bank is associated, but we can probably talk about this a little later. Now, regarding the second question very quickly, it's true that the FCPF in particular has been quite slow to disburse money, but again, you know, these things are not so simple. You know, there was just in the UK Sunday Times about 10 days ago an article saying, you know, the World Bank sits on the millions of dollars pledged to beat climate change. Well, guess what? It's not so simple, right? And especially if you want to do this with the objectives and the concerns that we all have in mind. I mean, just before the UNFCCC negotiation session, we were in Panama, and in fact, Francesco was there too. We had a global dialogue on the FCPF with indigenous peoples. Trying to get these indigenous peoples leaders to Panama was incredibly challenging. So I realized I put myself in the shoes of a government that tries to organize consultations. This takes time. There's a huge information gap about what RED Plus is all about and how communities can or be affected, will be affected, and what they can do, you know, how their livelihoods and rights are to be factored into this. So, you know, it's not just about moving the money, it's about moving the money to the right goals. Also, we talk about billions of dollars. That's all very nice, but, you know, a lot of these countries have actually a limited capacity to absorb and disburse this money. So that needs to be built. And this is not a surprise. Again, RED Plus gives us an opportunity to build this capacity. So what we refer to as readiness, you know, we've realized is really quite comprehensive and goes back to some of the fundamental issues that explain why countries are, you know, not developing as fast as some others. And we run into the same issues with RED Plus. And so unless readiness takes these on board and takes the time to address them correctly, you know, it's not going to make a big difference in the future. So it's probably good to take the time to get things right.
Okay, take the time to get things right. Michael Jenkins, yesterday you launched your report on the state of the forest carbon markets. So we'd like to maybe share with this audience some what you think are the key implications of that report, especially with respect to the prospects, you know, for increasing growth in voluntary or pre-compliance markets. I got to tell you, I'm not a master of the universe, but $178 million in transactions just doesn't sound like a lot of money to me. It's just, you know, it's not that much. So given the uncertainty which your report admits to, explain to us why the sort of upbeat tone of your report doesn't constitute irrational exuberance of some kind. I also understand that you guys at Forest Trends have started a new initiative on tracking this forest finance that's having a little trouble getting off the ground for the reasons that Benoit has just described to us. So maybe you can tell us a little bit about that initiative and what we can expect to be hearing out of it in the coming months.
Great. Thanks, Francis. And Irrational exuberance, that's good. I like that. I like that. I'm going to stick with that. But I think the thing to, when you think about the voluntary market, and that's what we were tracking, the transactions, the voluntary market, you've got to remember that the voluntary market is not going to save the world's forests, okay? The regulated carbon market is not going to save the world's forests, but they are pieces of a puzzle, the way I like to think about it, that are going to be critical about putting greater value into forests. I think in the long term, that's fundamental if we're going to win this battle at all. So I think that's the context you need to think about it. And when you think about the voluntary market, think about it as kind of an incubator. There's always creativity that comes out of these early stages of voluntary action that eventually become part of maybe a regulated scheme going down the road. So that's the way to think about it. And it was a surprise to us. So we track the voluntary markets, we track the forest carbon markets. Huge surprise to us to see this market grow so much this last year. I mean, we were completely anticipating it was going to follow all of the other economic indicators, down, down, down. So that was really, truly a surprise to us. And there are a couple of things that I think are valuable to kind of talk about. One is that we were able to track 400 different projects globally that are in this voluntary carbon space. So that's not an insignificant number. It adds up to about 7.9 million hectares of forest that are being impacted by voluntary carbon transactions. That is the same number of hectares as oil palm plantations in Indonesia. So it's a bigger deal when you think about it in different ways. And if the value of carbon was not $5, but it was $3,500, which is the value of an acre of oil palm, those numbers would be really, really different. So let's just put into context what that piece of the puzzle means when we think about it. Other things that are important that came up is that we're really seeing a shift in this voluntary carbon space from project developers coming from the NGO side, all of our friends in the NGOs, to really a private sector that's starting to move into the space. So for us, again, that's a pretty interesting signal and one that is important, I think, as we look forward. There's also what we call a flight to value. So 4 or 5 years ago, there was a lot of, offsets, carbon offsets, they're all bogus, look what's happening over here. And what has happened in the meantime is there's been a tremendous amount of work done on creating standards and all of these safeguards that we're also focused on and that we care so much about. So you see the VCS appearing, the Voluntary Carbon Standard, the CCBA, which is all about communities. All of those things are becoming the norm in this new voluntary market, which I think is a really important signal, this idea of flight to value. Another thing to think about is what we look at is price. As I said, it's unfortunate that a ton of carbon is not worth a ton of oil palm. But we're seeing the price of carbon moving up in the last couple of years. And that's really important because if we don't get the price right, we're never going to be able to do all the things that we need to do on the ground. All of these incredibly complicated issues around tenure, all of those things, safeguards, all require a lot of energy and investment. And so we need to get that price moving upwards. And we're seeing that pattern. And then lastly, what's interesting when we talked with we do surveys of all the folks that we were gathering data from to think about like why are you moving into this market at this point? What do you see going forward? While I think all of us in the room would recognize that the idea of a global carbon market is uncertain at best, there are some other indicators that are out there. There are other signals that are really interesting signals that are happening. So we are not far away from having California become the first regulated climate carbon market in the world. Western states, there are about 8 Western states in the United States that are following form. So that becomes a regulated market. And a lot of the folks that are moving in this space, the business people that are moving in this space are saying, investment that is going to be the long-term financing for forests. That's really fundamental. I think we have an incredible opportunity to think about how we can use some of this public financing to meaningfully engage some of the private sector in the designing and the planning of this. They're instruments like, and we know these from other markets and other sectors, there are instruments like sovereign bond structures, there are instruments like risk guarantee structures that are all of the things that would be very useful if you want to start to think about bringing a private sector in to these very emerging, very risky markets, which are carbon markets. So as Francis was saying, we've just launched an initiative at Forest Trends where we're going to do just like what we do with the voluntary carbon markets, with the forest carbon markets. We're going to track these to try to bring transparency to really what's going on. There's a lot of opinions. There's a lot of opinions in this room, and we're not really operating from the same database. And we need to have the same data if we're going to be able to find some pathways forward. Maybe the last thing I'll say is just a reflection that it's also really healthy that we're starting to think about the forces outside of forests that are really important around forests. So we've talked a little bit about agriculture, a really fundamental driver. There's truly a collision happening on the landscape that we are living in today. When I was born, there were 3.5 billion people. If I live another 20, 30 years, there's going to be 10 billion people. So we'll have tripled the population of the globe in one lifetime. I mean, who would have ever been able to plan for that? So you see this collision literally on the landscape between what we call ecosystem services and functions. So those are forests and grasslands, and that's clean water, and that's clean air, all that stuff, up against the need to produce more food. You know, we're going to have to, in the next 80 years, produce more food than we have in the last 8,000 years. So there's a tremendous pressure on food security, food production. There's an equal pressure coming from energy. We will move away from fossil fuels. The carbon market is going to be a beautiful thing for about 50 years by the time we move away from fossil fuels. And that might no longer be important because we won't have the emissions coming from our energy sector. But there will be energy coming from someplace, and that will, a lot of it, I would imagine, will be coming from that same landscape. Those are issues that are going to be competing with food. Those are energy crops that we're going to be looking at. So there's this collision that's happening on the landscape that we really need to be a part of. We can't just do the analysis and do papers about it. We need to get into those conversations. We need to get into those boardrooms. We need to get into the minds and the business models of how those energy sectors and those agricultural sectors are developing if we're going to be successful in keeping forests on the landscape. So I think with that, I'll leave you.
Thank you, Michael. Lou Munden, your recent report is, shall we say, bearish on the possibility of developing forest carbon as a tradable commodity. Now, this concern isn't new. I think I saw Sandra Smithy sneak in, and I remember her expressing similar concerns at Forest Day 2 in Poznan, so several years. But I got to tell you, Lou, you've broken the hearts of forestry researchers around the world who've been killing themselves to develop methods for, establishing baselines and measuring carbon stocks and flows, and you're basically saying that it's not good enough. So is it really that hopeless? And if so, what's the alternative?
Certainly for that model as currently constructed, it's hopeless, yes. But I think the broader picture is significantly more hopeful, and I'd like to take a little time to explain why. First, although this report often gets attributed to me personally, there were quite a lot of people that had a hell of a lot more to do with writing it within my company that deserve a lot of credit. I won't run through the names here, but please do recognize that when and if you ever have a chance to run into any of the Munden Project folks, it's quite likely that they had a much, much bigger role in producing that than I did. Also, I think it's important to recognize that although for some reason we often get congratulated on it, that report accomplishes nothing. That report does not save a single tree, does not make a single person's life better in a forest, does nothing. It essentially lays out a list of what I would view as very legitimate concerns about a model that is perhaps now more manifestly dysfunctional than when we wrote it. But something else has to take its place. And here, I'd like to take a little bit of issue with something that you said regarding Michael Jenkins' report, and that is to point out as an entrepreneur that irrational exuberance is how things get done. It is the most fundamentally important element of risk-taking that we have. Without irrational exuberance, you don't get many, many of the things that we take for granted accomplished. You don't get iPads, you don't get to go to the moon, all sorts of things that at the beginning seem quite impossible in the absence of irrational exuberance are indeed impossible. So the question is how to channel the irrational exuberance in the right direction rather than trying to make it rational or less exuberant. And here, I find myself agreeing significantly with some of the things that Benoit Bosquet said at the beginning. The first is that, and I might not have said this a year ago, but there's an incontrovertible need for private finance at this point. That is because of the Eurozone crisis and the mismanagement by the ECB, of the European Monetary Union, which has created a, in my view, imaginary debt crisis, but that everyone believes actually exists. Therefore, you're going to see limited public funds. The political uncertainty in the United States around debt and deficits will have a similar effect. And then finally, the very difficult time that Japan's gone through after Fukushima. All of that together means that as much as some of us might like to believe that there's going to be a public-only solution, the facts say otherwise, and will say otherwise for many years to come. That's just the way it is. At the same time, there is a tremendous, and I think somewhat misunderstood, availability of private finance. Somebody mentioned at the top that commodity prices have continued to go up, and that's actually not so. If you pull up a chart on corn or soy or gold or silver or oil, any number of commodities, lumber, what you see is a pattern where, yes, indeed, commodity prices did go up in 2009 and 2010, but the last year has been tremendously volatile and slightly to the downside. This has created opportunity in two forms, which I think is interesting. The first is that a lot of money to get out of that volatility, because it's a little bit difficult to justify to your risk committee that you're going to be investing in something that bounces around 3 or 4% a day. A lot of money has been parked in treasuries and bonds and that sort of stuff, and it's killing people. They're not making any money on that, but it's just it's a flight to safety. If they see some reasonable opportunity to invest in a different type of asset class, the money's there, well above the scale required by this problem. The second opportunity that I think that's interesting that creates is that there's uncertainty related to commodities investment, which is one of the major drivers of deforestation. It's actually kind of unclear at this point whether it makes sense to move forward given uncertainty, for example, in metals. You know, silver dropped 15%, I think, in a day 2 weeks ago. If you're sitting there thinking about a mining operation, that kind of price signal from the markets makes you a little bit more hesitant. You will start to see effects from that, and that will give you some breathing space maybe to get something accomplished. So this brings us to an interesting question. There's a need for private finance. There's availability of that money. The question is, where do we take that irrational exuberance and transform it into the right mechanisms for private finance? What kind of private finance are we looking for? I was really pleased to hear Benoit describe a broader range of possibilities because fundamentally, as a market participant, I can inform you that speculation is, yes, one form of private finance and tremendously functional in certain types of limited scenarios, but really what you want in this space is investment. For the simple reason that you want the incentives of the investor, the capital participant, aligned with the outcomes that you're trying to achieve, because the outcomes you're trying to achieve are not simply financial in nature. Speculation works at loggerheads against that. as a guy that's written more than a few trading systems, I can tell you that we really just fundamentally don't care what the underlying asset is. We care about its price behavior, its volume behavior, that sort of stuff. We care about how much leverage we get in and out of the transaction. None of these things have anything to do with the objectives that you're talking about with respect to red. Investors, if you can create systems that align their incentives with the actual outcomes that you're looking for, are a very, very different set of folks. Those are the kinds of people that you want to be after. Not the kinds of people that are, that are going to be buying and selling in 1 minute round terms. That begs another question. Through what means? It would seem to me that there are a couple of fundamental attributes that you're going to have. The first one is scale. It is not realistic to expect any significant level of private capital participation from investors at the kinds of small scales that everybody's been talking about up until now. That's and it's just a simple reason, which is the diligence requirements associated with that sort of investment. It's just too expensive to justify, particularly when there is more of an emphasis on trying to fully understand risk. Diligence requirements are just going to be too high. So you've got to have something that scales more broadly. The second is that you've got to have something that that feeds performance back in to the capital model. It is absolutely essential that mechanisms that are created not just require performance, because I think we've seen in a lot of things that requiring performance probably doesn't really work. It has to enforce performance and reward that performance when it's good just as much as it penalizes it when it's bad. That, it seems to me, is an essential element. The last interesting question that comes out of this is I think, to what ends? And here, as a more private-oriented participant, an organization that didn't really know very much about this when Ford first put this in front of us a couple years ago, one of the fundamental questions I think that needs to be resolved is whether you are talking about an environmental product with environmental objectives, or if you are talking about something that has a dual mandate, development and environment together. I will express an opinion on it, but may not be shared by everybody. It seems to me that when we talk about things like rights and safeguards, that is much more than a box to check. It seems to me that there is increasing evidence that enables something that people call software all the time, which is a knowledge economy. That by having mechanisms that incentivize the people that live in these places to participate actively in the generation of the outcome, you are leveraging their superior knowledge, their deep, deep level of care for the environment in which they live in. In other words, it's not an abstraction. And you're probably going to get superior results from that. Now, again, research suggests that this is the case, but it doesn't suggest so at scale. So it seems to me that one of the things that you would start with, given the requirements that I've just outlined, is a broad, performance-oriented framework that tries to take a rights-based approach to doing this. Over a certain period of time, measures the performance associated with that approach, determines whether there is indeed some kind of saleable activity that can be aggregated out of each of these local solutions together as a portfolio, and combines that with a road to private capital.
Okay, thanks very much. Next up, we have Matthew Wyatt. You represent the public sector investor, and from a government that's shown leadership across a number of fronts in this space. So what is your assessment of the changed political and economic environments that is going to affect both public and private finance for reducing forest-based emissions? And in your judgment, is there time or need for a mid-course correction?
Wow, some tough questions, but I've been lucky that speaking fourth, I've already heard from a number of others, so I've got some cribs to help me. And I must say, actually, before I start, that irrational exuberance wasn't part of the job spec when I applied to become a civil servant, but I'll be trying to build.
It really should be. That would
exactly.
help.
We will
That
build
would
it.
help a lot.
I can really commit that we will build irrational exuberance into the work that we're doing. I mean, maybe one of the first things I should say, because I think earlier Benoit touched on this, is first of all, to answer your first question about the implications of what has been happening in the world, financial crisis and so on, for public sector flows. I think that obviously the augurs are not good in terms of what that will mean. But nonetheless, there is some very real money, public money, which has been pledged and which I think will be delivered if we can show that we can deliver it really well. From the UK's point of view, just a couple of numbers. One is that we committed £300 million under Fast Start under the Fast Start at Copenhagen for forestry. That was over the 3 years to 2012. And separate, overlapping with that, but the new government, under its spending plans for the coming year, has committed £2.9 billion for work on climate change. And essentially one of my jobs is to try to make sure that I can come up with ideas to spend that money well in forestry. The sectoral split is not yet decided, so there's everything to play for. I think maybe the other thing, there is some real public money there. Why isn't it moving faster? Or maybe we can come to that, but it's there. The other thing is, I think, transparency, which I think was touched on kind of implicitly by one or two other speakers. And from the UK point of view, we think transparency about aid in general, about climate finance, is absolutely key. I know it's a very controversial issue, including in the negotiations, but from our perspective, we publish all our allocations. We now, in real time, as programs are approved, they're published. You can see them on our website. We're part of the International Aid Transparency Guarantee. So I think transparency is really important, not just for public sector, actually, but for everybody as well. However, it's fine to talk about the public money, but I think, as Lou mentioned, it's just a drop in the ocean in terms of the need. So the question for me is not, can I find some good projects to finance with the money that the British taxpayer has been generous enough to allow us to manage. The question really is, how can we actually leverage this up, and how can we attract much, much greater flows of finance so that we can really try to get the job done. And as you say, there are huge pressures. The food and agriculture, and the pressures that were spoken about there, population, increasing pressures, and the financial crisis make that all the more difficult, because it's not just squeezing the public money, it's also creating difficulties for the private too. So I think if we say, well, look, the challenge is really, how can we come up with models which take the best from the evidence we've got and then enable us to scale that up and draw on finance from everywhere without losing the really important principles that we have in terms of, the social and environmental principles, the principles that people who the land that we're talking about, the forests we're talking about, are often home to people, and if we're not careful, and if they're not careful, there are all sorts of risks about negative outcomes for what we're doing, which will in turn undermine the political will to get the job done. I think that's really the challenge that we face. We have got an evidence base. I think it's not as strong as we may like, but there is an evidence base, and we do need to be out there making clear that that's the case. We have heard recently there have been a number of people criticising the approaches that we're taking, particularly with regard to community forest management, saying actually this is all a bit faith-based, it's a bit kind of ideologically driven and so on. There is an evidence base. I think some of it was referred to earlier on, the work by Chomitz and Agarwal, and the work that C4 has done itself and so on, and the World Bank has done. There is a good evidence base, but we do need to continue to invest in strengthening that evidence base and getting as much real-time data as we can to strengthen the case for that, because there are those, and also there are those who doubt it, and also there are those who are very, very keen to get work done because of the urgency, quite rightly so, but are also incentivised perhaps to want to cut corners. There is frustration out there that this finance that was promised, which, as I say, I think is real, isn't moving fast enough. Why isn't it moving fast enough? Well, we can debate that, But, you know, there are people who say the urgency is such that if a few social safeguards here and a few environmental safeguards there have to go in order to get the bigger prize, as they would see it, of keeping the carbon in the forests, then maybe so be it. I think that's a very dangerous road to go down. It's certainly not a road that we in DFID would support. We're very committed to the social and environmental safeguards. We really do believe, and I think Lou put this very well, that you know, if you protect the rights and work with the communities that are living in forests, you've got a much, much better chance of success. So we would very much agree with that. But I think we have to be sensitive to the fact that although there's great work being done, you know, and each of us can cite little bits of great work we're doing, we're not yet getting anywhere near the scale we need to get to. And I suppose the one key kind of takeaway I have on that is that we really need to be very, very innovative. I guess this is where irrational exuberance comes in. We've got to bring in new approaches to agriculture, you know, the biggest driver of deforestation, are going to be absolutely key. New approaches to payment for results. Absolutely right, I think, that we will need payment for results if we're going to attract the resources that we need. We need to couch payment for results, though, in a very smart way. It can't be just about payments for keeping carbon in the ground. It has to be broader than that. We have to look at, you know, payments for ecosystem services, payments that result in livelihoods being protected. 1.2 billion people depend on forests in the world, not just those who live in them, but those who depend on forest products. So we've got to couch our payment for results in smart ways, and that's a real challenge to us all. And I think we can only really rise to that challenge if we also start investing in two things. One is new technologies. We have to use technology smart and right as we do this, but we've also got to have new partnerships. You know, it's not always comfortable. You know, NGOs have been working in small areas with communities themselves, who maybe have not been dealing with kind of big capital. These are not partnerships that kind of sit easily always. And I think if there's one thing that perhaps those of us in the aid and development world, and the likes of DFID, perhaps the World Bank and so on, is to try to help broker some of these partnerships so that we can get approaches which at the local level look and feel and genuinely are local and speak to the needs and the rights of communities, but that the results of those initiatives can be scaled up in ways that then become attractive for private capital with the right incentives, and we've got to get the incentives right or this can go horribly wrong. With the right incentives can scale up the kinds of investments so that we can get the kind of scale that we need and address the problem at the scale that it's on. So I guess, you know, the thing that really keeps me awake at night at the moment is the disconnect between the time that we have and the urgency. The urgency is absolutely there, but as Benoit says, it takes time to develop good initiatives. And I think the only way we can square that circle of scaling up in the kind of time frame we have to scale up is by being really imaginative about the new partnerships that we have and create the right incentives to crowd in the finance that we need, and that does mean private sector capital. Thank you very much.
Okay, thanks. So, last but not least, we have Julio Martinez. Julio, maybe we can ask you to be the voice of affected peoples and look at carbon finance from somebody on the receiving end. What are your primary concerns about the state of play? To what degree do you think that rights-based advocacy has affected the state of play? And where do you react to this sort of dilemma about, on the one hand, political discontent about the slow disbursement of climate finance, but on the other hand, a political demand that governance and safeguards all be in place as a precondition for that disbursement? Julio.
First of all, I'd like to present myself. I'm Julio Martinez. I'm from the Federación por la Autodeterminación de los Pueblos Indígenas. It's a federation for the self-determination of indigenous people in Paraguay. So our system depends on a distribution mechanism which is both positive and negative. There's a prior consent, informed consent that is necessary, and we assess the land that belongs to the indigenous people and the effect of the carbon trade-offs that that they would have. We establish mechanisms to recognize the trade-offs that might be applicable and the compensation that is available to the indigenous people. We want to protect the traditions and the customs of local people. We support territorial initiatives and try to protect the values of local people. We try to channel the local resources in the best way possible and consult with local authorities on different issues. We try to safeguard the rights of indigenous people within the UN CCCF framework and the framework for human rights. We take collective action when there are issues, and this is something that has occurred in Paraguay. These are the most important points that I'd like to highlight. And on the other hand, we have also taken part in a program in order to guarantee that the document protects the rights of indigenous people. This contains a lot of technical information and includes the participation of the relevant authorities. We want to create a space to protect the rights of the land of the indigenous people. We do not receive any money or receive any finances from the government. We receive all our financing from independent bodies. We have been able to incorporate different guidelines on the rights of indigenous people and safeguards and a consultation proposal. We've also been able to establish informed prior consent. We are not involved in any red process, but we do work in conjunction with the government as part of an official delegation to the Convention on Climate Change in 2010 and 2009, with the aim of lobbying the state and other countries to respect human rights when it comes to making decisions on forestry and climate change. We have been able to make a lot of progress in this process, but we have also we've also had to make certain sacrifices or compromises. There is a chapter called Guidelines of FAPI on the implementation of the PCN on indigenous territory. Here, conditions are established that could affect the indigenous people. There's also a proposal for a protocol for the process of consultation and consent for the indigenous people of Paraguay. So we demand concrete guarantees so that these proposals and guidelines are respected and put into practice. This document has been signed and we are expecting the funds. SEAM, Infona and ONU Red, or UN Red, have accepted the modification proposals and the inclusion of FAPI to improve the final document. We have highlighted the need for studies on the social impact and on human rights, as well as mechanisms in order to apply the FAPI guidelines on collective rights. This has already been included in the document. FAPI reserves the right to give opinion and decide on RED in accordance or in order to encourage the state to implement concrete proposals So FAPI right now is making every effort to update the information that we have when necessary and to spread this to the member organizations. So this is more or less the work that we are carrying out. But we understand at the same time that there are a number of challenges which I'm going to mention now.
Things that we have analyzed, there are several dangers with these policies. They can be double-edged policies depending on the rules, meaning it could affect livelihoods for better or worse. If several issues are not complied with, there are several dangers, and that's what we are seeing at the moment. There are some projects that can be carried out in the forest, and some of them can not. For example, natural medicines, wood industry, because probably some more money would be allocated for forest, and we could have different mechanisms such as land grabbing that can be used or have been used by business.
And I'd like to hear more about what you are envisioning as what those saleable activities attractive to the private sector might be.
Okay. Ian?
Thank you. Ian Redmond from UN GRASP. A few days ago, Achim Steiner, the head of UNEP, published or launched a report in Jakarta called Orangutans and the Economics of Sustainable Forest Management, which, after a 2-year study at the request of the Indonesian government, concluded that Sumatran orangutan habitat, if managed for carbon and sustainable use of non-timber forest products and tourism and the like, could bring in 3 times the economic value of converting that same forest to oil palm plantation, which is very encouraging news, but I'm a bit worried by some of the things that you're saying about the price of carbon in the future and the value of that. I wonder if I don't know if you've seen the report, but whether you can comment on those kinds of predictions which are based on the things that you're talking about, but which you have rather more worrying conclusions perhaps to draw.
Okay, let me do one more in this round, and we're going to have time for a second round. So, right here.
My name is Edward Milner. I'm an independent consultant. It just seemed to me there are 1 or 2 elephants in the room which nobody's mentioning. Some of these countries are allowing mining rights. I'm thinking of Peru. Virtually the whole of Peru has been parceled out to mining companies for mining claims. Doesn't that conflict with all of this? Same in the Philippines, where mining rights get precedence over forests or even community rights. And so basically, isn't the fundamental problem that we've got so many governments that absolutely don't have the political will to participate in this? And that's why I think reference to Costa Rica is so interesting. Costa Rica has a completely different attitude, and nobody seems to mention the fact that we're dealing with governments, some of which want to destroy their forests for commercial reasons, and other countries which, like Costa Rica, where the government is committed to conserving them and doing the best possible job.
Okay, got a good set of questions on the table, so let me ask Benoit for you to start out, since the first question was directed specifically to you, and just everybody in the panel can have a quick chance to chip in on any that you'd like to react to, but keep it short so I can fulfill my promise to those with their hands up that we'll have time for another round of questions. Benoit.
Thank you, Francis. Yes, to Simon, I think it's a very good question. Starting with your second question, Simon, I'm not sure that I would call this a mid-course correction. I think it's been a fairly slow evolution towards the readiness preparation proposal the way we have it today. And if we could have spared the time to get there, it would be great. But I think, I wouldn't change things. To your first very important question, I think this is, an issue and a recognition that we see now emerge in more and more of these proposals. I would perhaps just off the top of my head right now, point to the Colombian and Nicaraguan RPPs, readiness preparation proposals that are, but they're not the only ones. Of course, things may be written on paper, and the implementation, of course, will be the key thing. And then in terms of the budget that these countries receive out of these grants, how much emphasis do they put on questions of tenure and governance? The whole question of monitoring then these non-carbon aspects, benefits or risks, is going to be important as well. And we found out that the average RPP now comes at about 3 times the level of the grant that the FCPF has decided to allocate, so roughly $12 million. So a lot more money is needed for the basic readiness needs, and also the time is needed. So one has to reflect on this, and the participants committee, in fact, will be starting a strategic reflection on these questions next week. To Arturo and Costa Rica, he's absolutely right. Costa Rica has done a whole lot of work on this, and in fact the World Bank and the Global Environment Facility and many others have been partners of Costa Rica for the past 20 years. But interestingly, in the context of the very small grant now being prepared under the Forest Carbon Partnership Facility, we've realized that not everybody is equally happy among indigenous peoples within Costa Rica. And in particular, on the Pacific coast, you have divergences of opinion as to how the system of payments for environmental services can benefit them. And so these are the nuances that are very important, because if we talk about free, prior, and informed consent at a national level, you need to take into account all the people of the nation. And that's for a very small country that is very environmentally aware. So that gives you a sense of the challenge when you transpose this to Indonesia and Brazil and the Democratic Republic of Congo. Let me perhaps leave the floor to the others.
Okay, Matthew, are you willing to take on the elephant in the room?
Oh, right. Okay. Maybe just 2 comments. The elephant in the room, countries allowing forests to be chopped down. Obviously we know that deforestation is continuing. So we know in many countries in the world, even those that have made very good progress, forests are still being chopped down for all sorts of different reasons, be it mining and others. I guess that kind of relates to the point that was made earlier on the panel about the increasing pressures there are on both renewable and non-renewable natural resources caused by population growth, caused by economic growth, a whole nexus of issues, which is going to mean that there are going to be these pressures. The question is, does that just mean everything is hopeless, or can we do something about it? And I think that the view of most of us on the panel is that we can and should do something about it. And the things that we can and should try to do about it are, first of all, finding new ways to value natural resources and value our forests. And I think there's been some really interesting work that we've been pleased to be involved with, but UNEP and others and the World Bank and others have been looking at in valuing natural resources. And also there's another initiative actually being coordinated by the World Bank that we're in discussion with them, trying to help get the value of natural resources built into national accounting so that you begin to actually because in the past what we've done is systematically underestimated the ecosystem services that forests provide, and therefore when you're looking at your financial returns on a mine or on a forest, then the forest is systematically undervalued. So that won't stop all mining, but what it might do is help begin to level up the equation in a way that can ensure that greater value is being given to forests. We shouldn't give up on the carbon market. Of course, there are difficulties. You've heard from different people within the panel that the glass is half empty or the glass is half full. Either way you look at it, carbon markets potentially can play a very, very important role. And then there are the other things we've all been talking about including increasing investment in forests. And all of that can help change the equation, change the cost-benefit analysis for politicians as they're making their decisions about what to allow and what not to allow. So, I mean, the point is well taken that in many cases, you know, governments, I come from a government, governments can be short-sighted, they are subject to pressures and incentives like anyone else. I think our job is to try and get those incentives and pressures aligned as far as possible towards the objectives that we're trying to achieve. Can I just say one word about tenure and then pass on, because it was something I didn't mention in my initial remarks, partly because other people had talked about the importance of having tenure clear before you start making investments. And that obviously in the RED context is part of the RED readiness, and it's a really, really important part of the RED readiness. Within the UK government, we've been really pleased to be involved in the Forest Law Enforcement Governance and Trade Programme, which has been independently evaluated by Chatham House and had a big focus on tenure and tenure rights and so on, and ensuring that there was a really inclusive process that was going on in the countries in which that was working, and had some very, very concrete results in terms of reduced emissions, in terms of improved livelihoods and incomes for the poor people depending on the forest and for biodiversity. And also in Nepal, we've been supporting some work in Nepal which has had similar results, again, community-based forest program, but tenure being at the heart of it, and very, very important. So just to sort of endorse, I think, for those who are saying that this is absolutely key, I think we have to recognise that. The problem, of course, is that it's sometimes not straightforward and it's sometimes slow to get tenure sorted, and that then brings us up against this question of we need to move fast. But I think just to underline that certainly for us in DFID, tenure and tenure rights and getting clarity over that and ensuring that those who have customary tenure rights are not disadvantaged in that process is absolutely key. Thank you.
Michael, can you give Ian some comfort about the carbon price is going to save the orangutans in Indonesia?
I think what Ian, I didn't read the article, but I can imagine what it says. But the carbon price won't save the orangutans. But I think what the article was talking about is that you've got this full array of things that we call ecosystem services, that if you start pulling them together, start to add up to something that's a little more significant than a carbon price. It is really fundamental that we do not think of carbon as the silver bullet or the savior to forests. It's really part of an array of emerging environmental values. And I would actually take your comment and go one step further, which is, you know, we've been doing valuation for a long time. I don't know if you remember that in the U.S., probably 20 years ago, there was an economist that did a study that said the world's natural resources are worth $33 trillion, which was more than the GNP. And everybody said, great, okay, and what do we do about that? You know? So I think we really need to move from that kind of theoretical analysis, even at the country level, because we've been doing that for a long time too. We can point to things decades ago, to saying, what's going to change the price of silver? What's going to influence that oil palm market price? And getting into that discussion and saying, are they building into their price the costs that they are doing in terms of orangutans or in terms of indigenous communities' rights. All of those, I think, need to be real signals in the markets that are driving these changes rather than kind of theoretical conversations that we have. So I really would push that. I would also go back to the comment that was made about Costa Rica. And again, people might remember that have been around for a while. In 1986, Costa Rica came out in a big way and said, because that's when they started putting into place all of their protected areas. And so in 1986, Costa Rica had the highest percentage of protected areas of any country in the world. They also had the highest level of deforestation in the world. So, all of this is really evolutionary when you think about it. And Costa Rica, to come to where they are today, went through a lot of bad things in those early days. And so we need to keep that in mind, that today I wouldn't say Costa Rica is the leader globally. I would point to places like Australia or the state of Acre, even better. But I think there's no angel in the room. And I think this is all about literally the challenge that we have, because we all need minerals, we all need energy, we all need food, and we need these ecosystem functions. So we need to kind of rationalize those things in real ways. And it hasn't happened. The urgency hasn't been there because we were 3.5 billion people 50 years ago.
Lou, what are those saleable activities that Dan wants to know more about?
Numerous. I'll try to break this out into 3 different categories to give you some flavor for the array of options, and then suggest a little bit about the process by which one might determine whether theoretical saleability actually is going to translate into real investor interest. The first category is activities that are obviously transferable into cash flows. These are things like sale of non-timber forest products or ecotourism or things like that. In other words, activities in which one can engage that can very obviously and quickly be put out there in a way that translates into cash. Those cash flows can then be securitized in some reasonable form, the same way as cash flows from any other business could be. The second category is what I will broadly refer to as transfer systems. For example, payment for environmental services would be a form of transfer system. There would be an obligation upon some group of folks to, purchase these services. Absent the obligation, there's probably not going to be much of an interest to your point about the voluntary market before. That obligation requires them to put capital to work in order to engage in forest protection, not simply for reasons related to carbon or emissions, but for the many reasons that you want to be protecting forest watersheds and biodiversity and such. That implies a fairly stable macro framework in order to be successful. And I'm highly skeptical that that the best bet for doing that is at a global scale initially. I would suggest to you that certain countries with large enough sources of domestic demand and reasonably stable macro environments might be the best place to try those approaches out and see if they actually right, exactly, at a national level, and see whether that works. The last one is a particular topic of interest for us, and that's the idea that all deforesting activities, ag, mining, that sort of stuff, require capital in order to function. They tap the capital markets in some form or another in order to get the upfront investment required in order to build their operations. We've talked to a few folks about the concept of making loan facilities that are conditional upon their adhering to certain standards and objectives. To cite an example from Brazil, there's a terrific amount of deforestation that takes place from ranching. However, it's actually ranching of a certain sort It's extremely low yield, not terrifically competitive, and generally engaged in by medium to smaller size ranchers because they don't have access to a reasonable credit facility. They have to engage in a lot of shortcuts with respect to their operations. Well, one of the possibilities would be, and Brazil's actively examining this with their ABC program, is to say, okay, look, we can give you some reasonable access to operating capital, but conditioned upon you engaging in sustainable intensification that doesn't deforest. Now, there are a couple of common elements among all of those things that I've described. The first one is to go back to my point about the knowledge economy before. Each of these things require real people to do. And so those real people, regular folks, have to be incentivized to do it. That's, you know, the rights are certainly important from just a purely ethical perspective, but they are equally important in each of these three scenarios from an operational and outcome perspective. That's why you know, from the perspective of an investor where you're trying to put capital to work to get an outcome, that's why you want to do these things. It's not just, again, some box that you check in order to feel good about yourself. It's an active part of getting the outcome that we all need to have happen. The second thing is that it requires a good understanding about how to measure performance and measure performance transparently. Obviously, from our perspective as a company with a lot of experience in technology, there are wonderful things that information technology can do in order to make that more possible. I would note that to the extent that we are with Ford developing IT systems that do this sort of thing, it is important that those IT systems be open source. And I know that sounds like an exotic issue, but trust me, if you build these systems over time, if folks like DFID are investing in this and you don't have open source systems, you will regret it later on because it will create the very thing that we criticize in the report, which are these massive technology intermediaries that have very specialized knowledge and terrific pricing power, and you'll end up with a lot less capital going to work where it needs to go. So, if all of that is the case, there has to be some sort of risk-taking process in order to determine two things that are terrifically important from an investment perspective. First is operational reliability. If you take these various activities and either aggregate them together based on the type of activity or aggregate them together simply on the basis of abstraction to a cash flow, you have to establish some track record that shows folks in the private market that this can actually produce the outcome that they're looking to invest in. And the second thing is that any of these things that require the creation of an asset, so PES is a good example, you have to demonstrate, and this is one of the major criticisms that we had of the forest carbon market as currently constructed, you have to demonstrate reliable repeatability of that asset in terms of its creation process. In other words, that the same methodology applied in these various different places is going to get you the same amount of, a reliably predictable amount of asset, and that process isn't superbly expensive and doesn't work at loggerheads with the outcomes that you're trying to achieve. Hopefully, Dan, that answers your question, at least in part.
Okay, Julio, any last comments on any of the questions or comments that you've heard up to now?
Well, of everything that has been said, we have already mentioned on the plenary before that from what we can see on FAPI's side, it's like the important thing is that we can do what we want on our side. We always take into account putting into practice the rights of indigenous people and of those who live and depend of the forest. We are asking for all that to be taken into account. As an indigenous person myself, it is worrying how can I explain myself? From before, indigenous people have been concerned with climate change. And currently, everyone is concerned with climate change. And everyone wants to put a stop to it, but instead of doing so, it would appear that we are not really aware of the different disasters that are taking place. That is why I don't really know how to say this. But we need mechanisms in order to respect nature. And the consequences of climate change and deforestation. From before we started on this work, we knew that this was going to happen. But now what we're trying to do is how to put a stop to climate change. Everyone is thinking about putting an end to deforestation. But the mechanisms that we have found of respecting rights of indigenous people and complying with the regulations is not happening. It's like it's just one more thing.
Okay, I see that we're down to just a couple of minutes. So what I'm going to do is ask that the three people in this section that had their hands up just quickly make your 1 minute question. We're not going to have time to answer it, but at least it gets it out on the table, and maybe it can be addressed in sessions that come subsequently, and then we'll wrap up for the coffee break. So honor system, who are the three people who had their hands up in this section before we stopped? I think this was one. Okay.
Hello, my name is Duncan McQueen from IID. I just wanted to pick up on Lou's comment about scale and the need to have a scale of return to investment, not speculation. And the idea that somehow the smallholders have the knowledge economy necessary to make this work, and the challenge, therefore, of organizing and informing and building the capacity of the people who have that knowledge economy so that they can aggregate into portfolios of a scale necessary to be invested in. And who is doing that hard work of organizing and capacity building and informing? Seems to me that's a government job and a soft investor job.
Okay, there was somebody else right here. Again, who, yeah, excuse me, right here.
Sorry, I don't know if you want another point from IID. I'm James Mayers, also from IID, like Duncan who just spoke. It is a different point. It would have been a question for Matthew White, but maybe we'll hear a bit more about this from the Minister later on. I wanted to, if the wider playing field that we need to be on is engaging with and securing broader investment of the kind that several have spoken of, which I would agree with, then clearly we're going to need a lot of effort on the discourses internationally to move things around to that, to get things ramped up so such things are possible. And I wondered if the successor to the Millennium Development Goals, which will be different to MDGs 1.0. We're going to get MDGs or whatever 2.0, like round one of RED, rather limited, round 2 is going to be different. They're going to be different players involved. It's not going to be a sort of stitch up by the OECD, which is oversimplifying the MDGs, but there will be new players on board, particularly emerging economies. It'll be broader, G20, the BRICS involved, some of whom, of course, are absolutely critical to the prospects of land use that does the right thing by the environment. So what prospects for ramping up the potential, given that Durban and other processes are a bit bogged down, do we see in that process?
Okay, if the third person here isn't going to identify themselves, I'm going to... Oh, no, I just want there to be one other female voice than mine in this session, so Roz, you luck out.
Oh, thank you. Rosalind Ree from Ateneo School of Government in the Philippines. I have a question, probably more for Benoit and Lou. Benoit, you mentioned the need for safeguards monitoring, which I think is fairly well acknowledged in the process now. Lou, you mentioned the need for due diligence with scaled-up finance, and I assume that due diligence does include effectively safeguards monitoring, ensuring governance provisions are in place, etc. My question is, given, and I've been struggling with this, given the need for a robust system, but also the need to ensure that transaction costs are kept at a level which is realistic, then how do you balance these needs with the costs of the system? And so what type of systems are we talking about which are the most effective? Is this community-based monitoring, both for carbon and non-carbon benefits? So what's your views? Thank you.
Okay, thank you. So we're not going to have time to actually answer those questions, but I encourage you to ambush panelists during the coffee break if you have a burning need to follow up. Let me abuse the chair by making 2 closing points, and I will not attempt to summarize. Something that has struck me coming out of this discussion is that one of the things that I think we at C4 at least, and maybe more generally, didn't appreciate 4 years ago was how important the sort of subnational level scale would be as this red story played out, where you see that this whole, like the governor's task force thing is one of the most interesting things, and it may be this, what I now hear referred to as jurisdictional level accounting, maybe being one of the answers to the scale issues that Lou raised. So just something out there as something else that's changed over the last 4 years. And then I can't close without wholeheartedly endorsing Matthew Wyatt's point about the need to invest in strengthening the evidence base. I think that would be a really good thing to do. Okay, with that, I'm going to turn the mic back over to Andy to tell us where we go for coffee.
Well, I'd just like to say thank you, Francis, and thank you to the whole panel. This was an outstanding way to start the day. So thank you very much. And we have a 15-minute break. Please have your tea, have your coffee, and come right back because we've got another panel coming up. So, and then we also have a fantastic set of panelists to help us think through, okay, what's actually happening on the ground and what are the issues and ideas. So if I can invite Jan to come up, and then she'll say a few words, and then she'll introduce the next panel. But maybe we can ask the panelists to go ahead and start moving up here.
Well, actually, sorry to start out by contradicting you, but
Right.
you're used to it,
I'm used to it.
Yeah. We want to keep
to
the panelists down there until our panelist from Peru has spoken, because otherwise he won't. Okay?
Perfect.
Thank you.
Thank you.
Thank you very much. Hello, what a great panel it was to start. Actually very intimidating. So I asked Peter Device if he'd be willing to come up here and just replace me because I had to leave quickly. But, and Andy White actually last night when we spoke suggested that the first panel might get into the second panel's issues, and they definitely did, which is a good thing. So I certainly sensed some optimism about some of the openings and some of the possibilities, while there were also a lot of concerns, a lot of uncertainties. Unquestionably, there are major changes and issues to be faced. But the issue for this panel, in the context of RED, is how financing is reaching the ground and the perspectives from communities, indigenous peoples, and projects. And I've had a chance to speak to the panelists, and I'm first just going to make a few brief remarks before I introduce Justin Kenrick, our speaker, keynote speaker for this panel. I'm just going to make a couple of comments from my, how many times could you say many, Andy? Many, many years in this field. But for my many, many years in this field. And for many of us, we have been through a lot of cycles in forests and in environment. We've seen the work that Eleanor Ostrom did way back in the years and years ago in community natural resources in Nepal, for which she, it was terrific, got the Nobel Prize for Economics a couple years ago. And we've seen a lot of trends in forests, but probably the most promising was the huge interest that forests suddenly took on with the interest in REDD and climate change, with the potential that was finally seen, that forests could provide something. They were not just something to be sold or something that was a waste of land. And the one thing I will share with you as kind of an optimistic cynic, I just had to add to Francis's phrase, but is that I think we've learned a huge amount by virtue of that interest that came from the climate, what was seen and understood from the potential of forests and their contribution to climate, the carbon values. And it would be my statement before we go into this panel that I don't think we'll see that interest change. I think we have some challenges having to do with some of the complexities that the first panel presented. But I think that we have, as people who are concerned about forests, and in particular, I will let you know that, those of you who don't, that this is the International Year of Forests, and our theme for this year is Forests for People. And I think we have suddenly started to see, and forests brought back people into the story of forests. So with that, I'd like to introduce Justin Kenrick, who is an anthropologist. Many of you in this audience probably know him, but I just met him. He's a policy advisor on Africa for the Forest Peoples Program, and he studied at the University of Edinburgh, conducted a lot of work, field work in Central Africa, where I lived from 3 until 19. And then he continued to work with respect to local communities, looking at land rights and tenure and developing sustainable livelihoods, both in Central Africa and in Scotland. And the focus of his work continuing is looking at the forest people in Central and East Africa, particularly in relation to REDD processes and protected areas. I'm delighted to introduce to you Dr. Justin Kenrick.
That was a great first panel, and I've been asked to give a balanced and provocative, the organizer asked me to give a balanced and provocative intervention, so I don't know how I'm going to balance being balanced and being provocative, but I'll do my best. This session asks us to reflect on REDD and what's happening as REDD finance hits the ground, or it certainly hits the national level, which starts shaping actions on the ground. And to think about what needs to change, especially if current funding models and expectations prove unfounded. Following what Matthew said this morning, I also want to think about how the UK government might help. In particular, the question, does the UK government need less to seek new partnerships to crowd in private finance, and more to seek new partnerships with those people who have been protecting their forests over the longer term? Does it need to transfer to REDD, learning from its excellent FLEGT programme? So indigenous peoples' call for rights before RED often appears to be treated as an irritant by those who see RED as something that needs to happen and happen fast. The World Bank, when it displays a reluctance to recognise indigenous peoples' right to free, prior and informed consent, the full consent rather than consultation, governments and pilot RED projects, when they refuse to engage meaningfully with forest peoples, often appears to treat the question of indigenous peoples' rights as an obstacle to be overcome, FBIC as a hoop to jump through, in order to proceed with the supposed real business of protecting the carbon in the forests.
Sorry, could you slow down a bit because the interpreters are having trouble.
Okay, I'll try and slow down. Basically, the necessity of saving the climate can in these situations seem to trump any real consideration of the rights of local people, just as national development provided a similar reason before. Following on from one of Lou Munden's points this morning, securing indigenous people's rights, far from being an obstacle to saving the forests, is the most crucial step in securing those forests, and the most crucial step in stopping land grabs and other drivers of deforestation. That the rights of indigenous peoples and local communities must be secured for RED to proceed is agreed. The Cancun Safeguards Agreements show this. But the evidence points to the fact that this isn't simply a matter of justice, it's a matter of efficacy. Rights must be protected not just to comply with international human rights standards, but because that is the best way to protect the forests. So let's briefly look at two evidence sets that make this clear, and Geoffrey referred to these earlier, and they're absolutely crucial for reorientating our approach to protecting forests. Firstly, that the drivers of deforestation are not forest peoples, but industrial activities. But for example, Cameroon's ARPIN, its RED Readiness Plan Concept Note, submitted to the World Bank FCPF in 2008, states that slash and burn agriculture is certainly responsible for the greater loss of forest cover. Yet the only reference supporting this claim is to a World Bank report that suggests that the main drivers of deforestation are the industrial logging and large-scale plantations that create a degraded landscape in which small-scale agriculture and fuelwood demands become unsustainable. The main drivers of deforestation are not poor farmers or pastoralists or hunters and gatherers, but the clearing for large-scale logging, commercial farming, ranching and plantations, which force local people off their own land and potentially into unsustainable practices. Securing community forests and indigenous people's rights to their territories can begin to address this. The second evidence set that Geoffrey referred to this morning shows that community forests and indigenous people's territories are far more effective at conserving forests than traditional fortress conservation. C4's research compares 40 protected areas and 33 community-managed forests in 16 countries across Latin America, Africa and Asia. The researchers found that community-managed forests lost only 0.24% forest cover a year, while protected areas lost an average of 1.47%. Similarly, research for the World Bank's Independent Evaluation Group found that in terms of reducing deforestation, mixed-use protected areas are generally as effective or more effective than strict protected areas, especially in less remote areas. In Latin America, where indigenous areas can be identified, they're found to have extremely large impacts on reducing deforestation. So, clearly from this evidence, rather than imposing projects from the outside, the need is to secure and better protect forests through the recognition of community forests and indigenous people's rights. And this approach is one that is much more effective and cheaper than conventional protected area approaches, provides opportunities to improve local livelihoods, and ensures human rights are respected. So why are protected areas still multiplying rapidly and receiving the vast majority of conservation funding? Why is it that these areas are now in line to benefit from possible finance under global and national RED policies and funding mechanisms? So how instead can we better secure rights and so better protect forests? Firstly, through action to address the drivers of deforestation, including industrial plantations, unsustainable logging, biofuels, and the huge acceleration in land grabs. And this may require pushing to reshape global trade agreements and putting direct profit challenging pressure on the companies concerned. But I want to focus here on the second aspect, on action to secure community forests and indigenous people's territories. What is the potential for this within the current RED process? The current RED process provides an opportunity for the recognition of rights through international scrutiny. Where organisations like the World Bank oversee RED processes, then international security can create the conditions for the rights of forest people to be respected. However, whether human rights law is recognised in these processes often depends on the ability of those affected to mobilise support. Current RED processes also present a danger, the danger of imposed RED projects excluding and marginalising local people. Because reducing deforestation is still often framed in the fortress conservation paradigm. This means that local people are likely to be excluded. So the dynamic here, the dynamic of RED, is that the anticipation of RED raises the stakes. It creates conditions for indigenous people's rights to be recognised, but that attempt is up against the hard reality that they rarely have the resources to push their case. Especially since the promise of RED also creates a stronger incentive for others to claim their lands, claims which will almost certainly lead to greater rates of deforestation as well as dispossession. So there's a political opportunity for rights to be recognised, but this cannot be realised without support, because there's a massive power imbalance here. So could the UK's approximately £600 million, I believe, but I can be corrected by Matthew, ICF funding for forests be used to support indigenous peoples to secure their rights and support local communities to establish community forests? Could this include funding for land demarcation activities, land titling, resolution of land and territorial conflicts, and local livelihood support? Could the UK develop a trailblazing approach within the context of international human rights and so help kickstart a process of levelling up international action? So what's the state of the play at the moment? How is finance reaching the ground? The panellists are going to provide you with the details of this. I just want to highlight some key characteristics of how RED has been developing to date. So firstly, offsets. RED's developing in a context in which, as we know from the earlier speakers, there are real questions being raised about whether the carbon market can survive, let alone compete and deliver funds. Secondly, in terms of lack of rights, the World Bank, a key startup funder for many RED-related activities, still needs to strengthen its safeguards in line with the Cancun agreements to bring them up to international human rights standards. And partly as a consequence, at the national level, we find that land tenure isn't being taken seriously in national RED planning processes, including in budgeting. Not a single country's RPP, unless Colombia and Nicaragua have done something very different, which they may well have, which would have been great, but not a single country's RPP, even if they mention tenure, has put a serious amount of money aside in its proposed RED budget to work on tenure for forest people. The focus in RED is all about trying to put firm numbers on what is inevitably an inaccurate estimate of carbon, rather than ensuring robust governance. And also national readiness planning is not adequately addressing rights. National readiness planning and actions to date have largely worked against the basic need to recognise rights, often moving to delay, postpone or shorten consultations, and to move ahead with RED without having completed readiness. So FPP and partners' analysis of RED policies in 7 countries shows they have been formulated within outdated national legal frameworks on forest and land tenure. They do not meet countries' international obligations on the rights of indigenous and tribal peoples. So since the panel is going to provide much more depth, I just want to look at 2 brief illustrations of what's happening on the ground. In RED in Cameroon, where RED projects may affect over 30% of the national forest area, RED planners and donors seem to be relying on outdated national legal and policy frameworks in the forest sector that place all forest lands under state ownership and control and fail to recognise FPIC and customary land and resource rights. Indigenous peoples are barely involved in national RED processes. And as Julio said this morning, RED from the ground can often be seen as just one more thing, one more way of funding arriving to take over indigenous lands. Meanwhile, indigenous forest communities in Cameroon point out that their presence has helped protect the forest and that RED can only work if it's based on securing their rights rather than overriding their rights to their customary forests. But RED here is also an opportunity for indigenous people. Given WWF's principles on indigenous people's rights and World Bank safeguard policies, RED can potentially create space for effective participation by indigenous people if indigenous people receive support for international and national civil society to achieve recognition of their rights. The dangers are that their voices will be ignored and that the fortress conservation mentality will exclude them from their forests. So moving on to Peru, and again we're going to have a voice from Peru very soon, so I just want to touch on some key issues here. There's currently a rapidly increasing land grabs of indigenous people's territories across Peru. Suddenly remote and apparently ownerless stretches of standing forest have a potential value, and speculators are rushing in. This is in part caused by carbon cowboys, and the anticipation of RED and a gold rush mentality in relation to a potential global carbon market has led to unscrupulous carbon cowboys seeking to tie communities into carbon contracts they don't understand and that may involve alienating their land for very little. At the same time, and more positively, indigenous peoples in Peru are promoting an alternative to RED that aims to secure their ownership and to secure the forest based on their traditional occupation and use of the land and on developing sustainable livelihood projects. They see this alternative as needing to be tied not to huge funding streams, based on their forests being seen as offsets, but based on modest development funding to enable them to demarcate and secure their territories and to continue to use and develop additional sustainable livelihood strategies. So just to kind of wrap up in a sense here, I want to return to the question that I posed earlier. Because this approach in Peru reflects a much broader consensus among indigenous peoples. And it also reflects what Lou Munden was saying earlier. If I got him right, and he can correct me, he was speaking about how rights and safeguards can incentivize people who live in forest land to participate actively. And in doing this, you're leveraging their deep knowledge, care, and ability, and you'll get much, much superior outcomes. So the question here, in terms of my question about the UK funding, is should public money be trying to leverage exuberant and volatile private capital or exuberant and long-lasting real care and action by forest people? How can the UK government help ensure rights, and how can it help target finance at protecting customary tenure? Building the capacity of governments and civil society at all levels on international human rights, including FPIC, is obviously crucial. Pursuing a genuine phased approach to climate finance that seeks to assist tenure and governance reforms first, not leapfrogging the premature local or national RED schemes. Supporting governments to tackle the explosion of unregulated carbon trading projects by establishing a moratorium on such RED contracts. Providing direct funding through the ICF to support indigenous and other forest peoples. And probably most crucially, establishing a specific dedicated land tenure reform fund under the UK Forest and Climate Finance to support the demarcation of customary titles and to help secure such titles in national law. These would be really practical interventions that make a real difference in the present, rather than interventions which desperately chase after some future goal that may not be realised. So I hope that presentation provided either a balanced or a provocative perspective, depending on your point of view. Thank you.
Thank you, Justin. Well, I think you certainly did present both a provocative and balanced perspective, especially from the perspective of one group of people that are really important in this whole discussion. And the panel that continues will go on to talk about just how finance is working. However, I've asked them to please focus on, after talking about the problems there are already with RED, which to some extent the first panel has touched on. We heard a lot about it. And there's much more to be said. And if we talk about communities, which is also the indigenous peoples' issues as well and associated with that, and rights, the next question sort of is, then what? And what I understood to be kind of the focus of this entire day was the then what. Number one, what kinds of experiences with community forestry and with financing at that level and with indigenous projects have worked? There have, as I said in my introductory remarks, been many, many years of experience to try to scale up. Lynn Ostrom's work in Nepal and others' work in the same issue. A good friend of mine, Arun Agarwal from the University of Michigan, who's written extensively on these issues. There's been a lot of case study about the general issues about how to expand community forestry, how to make it work, not the least which, of course, is Rights and Resources and Forest Trends, who put a big focus on this very early on. But then the next question sort of is, okay, we've had that experience. C4 and others have done some amazing studies, some of which are are just coming out in terms of having some real history of analysis. IUCN is another that's done some very interesting work in relation to how communities operate and what those resources are. But then the next question that I would pose to the panel as they come up is going to be, well, then what? What needs to change? And this panel is not about how we fix the economic markets or the carbon market. This panel is about what else needs to change in order for us to go to a new place. Now, I regret to say we have, hopefully on the screen in a second, there he is, Roberto Espinosa, who unfortunately, I don't believe can see us, but he can hear us. And he's, I just must say, unfortunately replaced, or fortunately replaced, but for unfortunate circumstances, Alberto Chota, the president of AIDASEP, which is an organization with 1,400 indigenous communities in Peru, who unfortunately had a death in the family. So Roberto Espinosa, who is the chief advisor on climate change, forests, and rights in Peru, is here to share with us his views on how financing is reaching the ground, what is working from the standpoint of his 1,400 indigenous communities, and how he sees the future. Thank you, Mr. Espinosa.
Good afternoon, everyone. And I would like to thank the Forest Peoples Program and RRI for allowing me to participate in this conference. I don't have very much time, so I'm just going to highlight some of the main points. The person who was supposed to be taking part in this discussion unfortunately had to pull out at the last minute, so I'd like to apologize on his behalf. We have in Peru a very important position when it comes to the area of the Amazonian basin around the area of Brazil. The 1,300 indigenous communities occupy an area of 1,200 hectares. So I'd like to respond quickly to the question that was made. We are not receiving the finance to our indigenous communities. And when it does arrive, it doesn't arrive correctly because there are political issues. There are issues with the state, and there are political issues associated with the way we receive funds. So I'm going to make 4 key points on the situation in Peru and RED. The consolidation of the land and the territory of the indigenous people will not be viable in Peru if we base ourselves on RED, because the relationship between nature and the indigenous people is intertwined. It's the same process. It's inherently linked. So the survival of the forests is necessary not only for the indigenous peoples but for humanity in general. There are 12 million hectares involved, but there is a huge amount that still needs to be consolidated. RED has very high expectations. There is land grabbing that's taking place, and so RED may obtain certain benefits from this. So the Peruvian government is going to hand over the territory, and the indigenous people will lose their land. There are different organizations that are speculating right now, so this is a dilemma that we face and a challenge at the same time. Without changing the national regulatory framework or legal framework, this RED will not be viable in Peru, and it probably won't be viable in other countries. We could talk about how the carbon market is monitored, but we should go much further than that. The forestry law, which has been approved, has a lot of problems. It doesn't recognize the possession of, or land ownership of, the indigenous people. And so the hydrocarbon law also needs to be changed. Mining laws need to be changed. Today in Peru there are 20 million hectares which are attributed to the mining industry. This needs to change. We need to change the constitution that was enforced and established by Fujimori's dictatorship. So RED is associated with aggression, and its focus needs to change. The informed consent law has been approved in Peru, but it still hasn't been applied appropriately. This is something that needs to be worked on. The third point that I wanted to develop, and this is a message for Matthew Wyatt, who I think talked about the British government. What should donors do, or what aren't donors doing right now? Peru will receive $3.5 million from the World Bank. These are funds that have been approved. We will also receive a project worth 50 million from the Inter-American Bank for Development. So with these funds, we hope that the people will be able to reclaim their land. We hope they won't have to wait another 20 years. We hope that the UK, which is one of the donor countries, supervises this process so that the funds are assigned correctly and so that all the ongoing problems can be solved. We don't think that RED is a viable option in Peru, and with these funds we hope to be able to manage our community forestry. It's not correct to think that tenure is a difficult subject to deal with when there are laws and when these are being implemented and things run smoothly. In Peru now we have a new government, and it's a nationalist government, so we'll have to wait and see how the laws are observed. The laws on land and community forestry are still being developed, but with the laws that we have currently and with the political will that exists, those funds that I've already mentioned should be assigned to the relevant issues. We are worried that these funds will be spent on consultation, and that they won't get to the places where they are most needed. So we have the funds, we have the political will, but we'll have to wait and see whether the funds are spent correctly or not. So we'd like to know also how the British government is going to monitor the way that and supervise the way these funds are assigned. The Munde report is very clear and states very clearly that there are certain difficulties involved when it comes to protecting forests.
Thank you, because it's so important, but we have to keep 5 minutes to a panelist.
de carbono. Voy acabando.
Thank you. Sorry to interrupt you. It's really hard for you.
I'm sorry, I'm just finishing up.
No, Mr. Espinosa, I'm sorry. I really have to. Thank you. I really have to stop you now. And we'll come back with the panel in a second, if that's all right. Do you want to say one or two more sentences?
Lo siento, volveremos al panel. Ahora no sé si quiere añadir algún comentario más.
Bueno,
Yes, well, I would like to finish just saying that the carbon market is a very complex, and we need to think of a more holistic and quick mechanism based on the holistic conversation of forest and not the microscopic vision of the carbon trading. And indigenous people in Peru have tabled a proposal. We need a cultural adaptation and the modification of RED. Maybe during the debate we can expand a bit more on this. Thank you for the opportunity.
Thank you, and I really apologize to you for cutting you off here, but we have 3 other speakers and a schedule that's quite heavy, although how much time do we have, since we were quite late? Okay, thank you very much. So let me just proceed, and I'd like to bring up and in turn Andy Inglis, who, sorry, these aren't alphabetized. Andy is an advisor for Plan Vivo. It's a standard for designing and certifying community-based payments for ecosystem services programs. He's an internationally recognized advisor and facilitator with extensive experience in developing programs, strategies, policies, and capacity building. And in particular, with respect to RED, forestry and land use policy and practices, he's focused on more grounded, inclusive, transparent, and more likely to enhance human rights and reduce poverty. He's also an experienced designer and facilitator of multi-stakeholder consultation and dialogue processes and events. Let me just bring on the rest of the panel now. Daniel Zarin, who is the Director of Programs at the Climate and Land Use Alliance, which is a collaborative initiative that seeks to catalyze the potential of forested and agricultural landscapes to mitigate climate change, to benefit people, and to protect the environment. And finally, Mr. Tunde Moraquinho, who is a consultant with Environmental Resources Management, who has had to replace Odinga Odinga, the chairman of the Cross River State Forestry Commission. I welcome all 3 of you panelists, and I'm going to start out by saying that I think I've heard about enough as I want to about the World Bank today. Not that there's not to be lots said, and there's not lots to be fixed, agreed, but what I'm really hoping is that we can turn our discussion a little bit to the question of how is financing reaching the ground? RED is one of those major resources, hopefully, and we've heard lots about why it can be problematic and has been. And I don't mind, of course, that you highlight some of those issues, but where I'd like to see the focus of the discussion, if we could, is to look at, okay, what cases do you have where financing has worked within communities, and how could those examples be scaled up, and then what kind of institutional change or what kinds of changes need to happen, not only with the blessed World Bank, but with all of the entities that need to interact to make these differences for us to truly implement reducing forest loss and degradation. So I'm going to start out first with Andy. Thank you.
Thank you, John. Good afternoon, everybody. I'm hoping
a very busy slide has cropped up behind me. Apologies, I felt like a small farmer trying to cram everything into a small field in the one slide that I was allowed. I have the pleasure of speaking to you about Plan Vivo. I've known Plan Vivo since its inception, but I've only started working with it recently. But one thing I do like about it, I like a few things, but one thing I like about it, it is providing finance to the ground. It's reaching the local level. Other things I like about Plan Vivo are that it was born in Scotland, also in Mexico in the 1990s. But I think one of the things that attracts me most to it is that it's the carbon standard, the forest carbon standard, seems to capture the most about the community forestry experience a lot of us in the room have had over the last 10, 20, 30, 40 years. And it seems it's trying to capture that and use it and benefit from it. The key thing, I think, is the direct payments. There's a box behind me, different colours, showing how the sales, the Plan Vivo standard creates certificates which are sold on the voluntary carbon market. It has about 1% of the market. It recently sold its millionth tonne of CO2. So that's a big and small number at the same time, I know. But the way that the payment is divided, that we tell project developers that 60% should go to the local people, either individuals or the community groups who have signed the Plan Vivos, the management plans for the land that have created the carbon benefit or other environmental benefit. So we see from the table there, a nominal price, which is quite realistic, of $6 per tonne. Of that, $3.60 goes directly to the farmer or the community. So I'm quite impressed by that number. I've seen other people's numbers, and I think that's a fairly good one. Plan Vivo also uses and builds local institutions, governance, microfinance, rural banks where they exist, also using local NGOs for doing monitoring of the operations. The payments are primarily performance-based. There is a blend of upfront payment and performance-based payments. We think this works best because it gives people some early investment and some early confidence building to do that. But that is a measure that is accepted by the market, the people who buy the credits. I know we're short of time, and I'm trying to keep slow for the translators, but just a few other comments. The RRI, to me, that means rights tenure. That's the headline for me. And what I like about the Plan Vivo system is that talking about carbon and talking about payment seems to catalyse action on thinking about discussing and trying to secure rights so that people can apply, can fill in the forms to be part of the scheme. So it seems to be a very useful catalyst for that. Also then creates the dynamic to bring in that knowledge economy we're hearing about. Also starts the defence against the carbon grabs. We hear a lot about land grabbing, but what I'm hearing is there's going to be some carbon grabbing coming up in the future as well, with governments saying that they're going to claim the right to all carbon rights in our country. So I think acting at the local level and getting people thinking, with the kind of the money payments inspiring that thinking can help to defend against that carbon grab. A question about scale. Plan Vivo is often said, it's too small, a very small part of the market. But say in Uganda, there's the project there. It started with 30 farmers. Now it's 1,000 farmers. It's getting bigger, by the month. What do you think is going to create a successful national program? Something like that in Uganda, starting 30 to 1,000 in an upward spiral, or something written in a PAP or whatever. Maybe not in Washington, but in Paris or somewhere. I know where my money would be on and what would create in the long term a successful national program. And so, I think the scale thing is a bit of a red herring. But I think, just to sum up, Jan, that what I'm seeing from Plan Vivo, it shows evidence of, well, it's evidence of what can be done, what is being done, and from what I'm hearing already today, what should be done. Building up that local capacity, local incentives, performance payments, building up local institutions, reducing reliance on expensive international expertise. That's one feature we have. We try to reduce the need for international consultants. I think one lesson that Plan Vivo has shown is that we've raised the bar, and other standards coming in are having to do shared benefits and benefit sharing. So I think that will also apply to new entrants into RED. Also for the government. And the final thing, just to answer your question, Jan, what I see the kind of future and what governments have to do is to try and create that capacity to do that soft investment that Duncan talked about this morning, about the facilitating, the capacity building, the confidence building amongst communities. Now, I personally, in a previous life, have experience of that, ironically again, in Uganda, of taking, in this case, forestry officials, to give them facilitation skills, to build that into their own performance, departmental performance objectives, so they get promoted for being good facilitators, not for confiscating the most chainsaws, and that type of thing. So I think there has to be a whole turnaround in the philosophy and the skill set of those in government who are trying to get RED to work. Thank you.
Thank you, Andy. I know we'll be coming back to you, although I'm not going to let you off the hook on the scale issue, because while this is a great example of something that works, the biggest question in order to make a huge change is going to be how we take this and really replicate it, have many of the same. If there's a RED 2, which has been talked about this morning, then how could that catalyze exactly that sort of activity? I mean, that's, how do you tap into those funds? So next, I'm delighted to also introduce again Daniel Zarin, Climate and Land Use Alliance. Daniel.
Thanks, Jan, and thanks to RRI, Forest Trends, and the Forest Peoples Program for the opportunity to be on this panel with my distinguished colleagues. The Climate and Land Use Alliance in our philanthropic programs has kind of 4 areas that we focus on, and I'm going to direct my comments to those. 3 of those are geographic, Brazil, Indonesia, and Mesoamerica, and the 4th is in the kind of a global policy and finance space. And I will try to do that quite briefly and address Jan's questions in the process. And I'll try to focus on the last one, on scale up. The first one is how is finance reaching the ground? Regrettably, finance is reaching the ground slowly. I think that's no news to anyone. To us, it's just a quick example. It was quite a shock. We had a meeting in Jakarta with colleagues from public donors, including Norway, the US, and the UK, and discovered that in 2010, our measly philanthropic program had actually put more money out in Indonesia than the 3 of them combined. And that's single-digit millions of dollars. So money is reaching the ground very slowly. Even in Brazil, where Norway has made this major commitment to the Amazon Fund, and Brazil has been delivering the tons, as it were, the implementation of the Amazon Fund has proved quite slow and unsatisfactory in many ways, which is not entirely a criticism of the creation of it or of the motivation or of the, and should be that saying that should also include a statement that it's had a tremendous impact at a policy level, but the implementation of the Amazon Fund as a grant-making program, delivering money on the ground, has left a lot to be desired. What's worked, again, in these 3 regional areas, focus areas that we have, well, as many of you know, Mesoamerica, particularly Mexico, to some extent also Guatemala, certainly Costa Rica, Other countries have been leaders precisely in this area around community forests, indigenous rights. And the role that they are beginning to play in coming together, having those, the issues that we've discussed here be the center of the agenda at the national level for those countries has been, in fact, a success. And we see this most strongly perhaps in Mexico, but also among the development of strong Indigenous Peoples Alliance in Mesoamerica. And getting the notice, if I can say, of multilateral institutions, including the World Bank, in terms of potential future support for those kinds of efforts. In Brazil, it's, again, it's an example that's kind of picked up on what had been an ongoing process within Brazil. Some of you may remember several years ago, the Brazilian government started a program called Pro Ambiente, which was designed as a payment for ecosystem services and social welfare program in the poorer regions of the Amazon. They developed quite an impressive institutional architecture and framework for it, but then did not come up with the funding actually to do the payments for that purpose. We've been helping to support what has been actually one of the Amazon Funds projects that was recently developed to actually go forward and implement on the Pro Ambiente program in an area on the Trans-Amazon Highway. And that's, again, a very interesting experiment because it is, it's focused on payments made to small farmers who are part of the asentamientos. I'm skipping the English word in for the moment. Settlers, the agrarian reform project in the Amazon region, and that effort to provide payment carbon pooling. But at the center of that, those projects were interesting to us, not because of the carbon part of it, but because they were projects that were actually had at the heart of them the achievement of progress on community tenure over the land. And so we see that as something that is quite real and operational within the national context in Indonesia at too small a scale. And so coming to the scale issue, how do we move to scale up institutional change? I mean, I'm quite pleased to hear Justin's presentation. I found myself nodding, so I guess maybe it wasn't controversial enough for me. I think there is indeed a real need to put land tenure at the center of RED implementation programs at scale. And part of that, I think I just want to come back and kind of put a bit of a marker there and just remind us that when we're talking about RED, we're talking in this room now, mostly we've been talking about two things. We've been talking about rights and we've been talking about markets, right? But the driver behind this, to use that word in a different way than it's been used so far, is actually climate change mitigation and the need to reduce emissions from land use. There's a clear overlap between the rights agenda and the mitigation agenda, and we've heard that identified repeatedly here, that the rights issue is, and it makes me cringe every time people say it's not just about social justice issues. I mean, those are the heart of what many of us here care about, but from a mitigation perspective, it is really about that we need these rights definition for mitigation from land use to be both effective and sustainable. And there's a clear overlap there. There's also, you know, we're not quite sure what it is, and as Lou and Michael and others have talked about, there's a lot of need for thinking about markets and mitigation and how those two things work together. But there is some clear understanding that there's something there that merits more engagement. It's not entirely clear, and I wouldn't take it as a given that there is an overlap between all three of these things, and that we should be thinking about markets and the rights issues as part of the same thing, and that we can deal with rights through markets and markets through rights. That's really not at all apparent. And part of what just sort of drove that little tangent, if you'll allow me, Jan, is the recognition that what we need in the mitigation space is transformational change. Okay, we are driven by urgency in time to reduce global greenhouse gas emissions. And not just from this sector. I mean, this sector we're talking about is a 15 to 20% sector of the problem. We have to make sure that the other sectors get addressed with urgency too. But we do see real opportunities to address this sector with urgency, and we should focus that kind of urgency on the places where it's most urgent, which are the big emitters. And so that's part of why Brazil and Indonesia are big parts of our program. And we see some real success in Brazil. And let's remind ourselves that globally we see success in terms of an overall decline in forest emissions from the decade of the 90s into the decade of the 2000s. So there's a trajectory there that needs to be accelerated. Brazil provides some good opportunities there, and part of it, not all of it, but part of it is that Brazil has successfully put a range of land designations, including indigenous lands, including extractive reserves, including sustainable use areas at the agricultural frontier. And that's been effective. So there are lessons there. There's a lot to do in Indonesia that is further behind in that space. So I think that in terms of the transformation and the scaling up, we need to pay attention to these, to the need to incorporate tenure into these programs. We need to pay attention to the need to address drivers and markets, but perhaps not as part of the same bucket. It may be a different bucket to address some of the issues that we have. And I would just close by pointing to and I know that Hernando de Soto is not necessarily the most popular economist in circles of those interested in communal landholding and communal rights issues. But he had an interesting op-ed in the Washington Post a couple of days ago in which he pointed to the very interesting phenomenon that as emerging economies had achieved some success in their economic growth, in part through through pushing increasing clarity around the ownership of assets, that the developed economies had gone in the opposite direction. And look at where that led them. And if we can take that to heart in the space that we're working in, about the clarity of ownership of assets being the underlying theme here, then what that ought to include is that those of us who do I think it's important to push on the World Bank, but not just the World Bank, the National Development Bank in Brazil, which is much bigger and has more impact in some of the regions that some of you care about, to in fact push for not just looking at what is the carbon impact of projects, and not just projects in the land use sector, by the way, but also for projects that are in the land use sector, what is the tenure? How are you dealing with tenure? And I know some of you don't like having check boxes to have in places, but check boxes can be useful if they force the focus of not just multilateral, but also bilateral donors onto these issues. Thanks.
Thank you. It's tempting to let all of these speakers go on, but I want to give everybody a chance in the audience, some chance to interact as well. Some interesting comments so far already. And I'd like to thank you, Tunde, for stepping in at the last minute for Odigo Odiga, and look forward to your comments.
Thank you very much. I'd like to apologize, first of all, for Odigo Odiga, who can't be here. Basically, he had problems with his visa, and he's had to fly straight to Germany, so couldn't come, but hopefully I'll be a good substitute in his place. Basically, first of all, I'd like to tell you a little story. I represent Cross River State, which is one of 36 states in Nigeria. And it's a state that has 50% of Nigeria's forest. And in the early 1990s, DFID basically set up a program in Cross River State to support the Forestry Commission. The focus of the project was initially to help secure the forest reserves, which are run by the state government, and to clean the boundaries of the forest reserves to restore their integrity. But an element of the program was on legal reform, and another aspect of the program was to try and increase community participation in the management of the forests outside the reserves. Now, this program went on for 5 years, and in the course of the 5 years, they worked with a number of different NGOs who worked with over 70 different forest communities in the state to help them map their community forests. They also worked with the NGOs to basically reform the state's legislation, and it became the first state in Nigeria to basically formally recognize community rights to forests. Now, the interesting thing was 5 years later, community forestry went out of fashion and DFID. They chopped the program, and quite abruptly, which, really let down, the expectations of many of the communities. But the interesting thing is that 15 years later, very little remains of DFID's efforts to secure the forest reserves. Very little remains of DFID's efforts to improve the policing of the reserves. But 15 years later, there are 30-odd community forestry committees in over 100 communities that still function without any donor support. Just last year, the laws that were revised under the DFID program were finally passed by the state government, making Nigeria the only state in Nigeria to uphold community rights to forest resources. So it's interesting that 15 years later, after community forestry went out of fashion, and after DFID basically dropped the agenda, there is still this legacy that carries on till today. So anyway, what happened in intervening 15 years? Very little happened in the forestry sector, very little investment and very little interest from donors, until quite recently the idea of RED came along 2 years ago. And the interesting thing was it was these empowered communities that actually lobbied the state government through NGOs to actually have RED put on the agenda of the Cross River State government. And the Cross River State government then went on to lobby the federal government of Nigeria to say before COP15, if Nigeria is going to go to Copenhagen, we want to make sure that RED is on the national agenda for Nigeria. So it was interesting that these empowered communities were the ones who actually pushed RED onto the national agenda. Now, there's been a lot of consultation with communities. Communities have been very, very active in the whole kind of debate around RED in Nigeria. And the thing that has remained absolutely central throughout the debate is the fact that community rights to forests and revenues from RED must go to communities. So that is absolutely central to the debate of, with RED in Nigeria. We are now kind of, hopefully tomorrow, going to get approval from the UN RED Policy Board for a RED program in Nigeria. But one of the things that was interesting was in the latter stages of when it came to formulating the budget for the program and the design of the program, we actually had to fight tooth and nail. When I say we, I mean the forest community representatives, the NGOs, and the Cross River State government representatives. We had to fight tooth and nail to get 10% of the country's budget allocated to project-level, community-related RED interventions. 90% of the money was going to legal reform, consultant fees, etc., etc., etc. We absolutely had to fight to try and reinforce that 10% to go to community-level initiatives. And when we were in communities, people said, yes, it's all very well to ask us to forego our forests, clearing our forests. It's all very well to ask us to forego inviting logging companies in to clear land, but how are we going to put food on the table? When will money from RED come? When will RED bring development? And we were told, the RED consultant said, well, it'll take 4 or 5 years before any finances come to communities. And women said, we can't wait 4 or 5 years. There has to be, you guys need to do something to make sure that development of some sort come to communities before then. Otherwise, communities will not wait for 5 years for RED benefits to come, because there are daily pressures that these guys are dealing with every single day. So in terms of what, what needs to change, I've been to endless international RED meetings where there are elaborate MRV frameworks, etc., etc. There's very, very little debate or very little time spent debating how finances will really, really reach communities. How is it going to get to an individual community from some national level program? How is money going to go to individual households? And there was a lot of debate in the communities about these very issues. So communities are not naive. They're very, very savvy about these issues, and they have the answers if we care to listen. But the debate really needs to move away from carbon trading, big national schemes, to looking at what really works at the micro level. And I think, the DFID intervention in the early 1990s, which worked on a statewide approach to tenure reform, to looking at forest rights, to looking at livelihoods issues, and supporting real community forestry projects, had a lasting success, which we can still see today. So I think this is where the focus of the Red debate needs to move to if we're really going to achieve change. In terms of scale, I would like to put something else out that I think is slightly different. Since Cross River is one of 36 states in Nigeria, Nigeria is a very, very big country, very, very complex, hundreds of different ethnic groups, all sorts of problems which you know about. But Cross River State, because it has 50% of the country's forest, decided as a subnational entity to push the Red agenda to the FCPF, to the UN Red, to the federal government. And basically, Cross River State has acted as an intermediary between the international and national and the communities. Why do I think that a state or a province should be a focus in the Red debate? Basically, a state is a smaller entity than a national government. It's very, very hard to see the president of a country. It's not that hard to see the head of a province or the governor of a province. If communities are really, really unhappy about the way forest programs are running, or if communities are really, really unhappy about forest governance, it's much, much easier for them to put pressure on a state than it is for them to put pressure on a national government. So in terms of accountability, provincial or state governments tend to be far more accountable to communities. And for international investors or international donors who want to support forestry initiatives, those subnational entities are also far more accountable, I believe, than national governments. So I think if we're looking at the issue of scale, I think the subnational entity is a key part of that.
Thank you, Timothy. I think we should get to all four of these panelists and our keynoter a big hand of applause. We have a few more minutes, and I'm going to just make a brief summary of what I heard for the key comments, and at least just give a few people a chance to ask a question or make a comment, because it's been a rich panel and we really are short on time. But what I heard, key messages were that money needs to go directly to communities and indigenous peoples without huge transactional costs going to foreign consultants and other institutions that simply siphon away the money, and that's clear. We need to focus more on what works and how to scale it up, but there were some great examples by all four speakers. And I think I heard very clearly that land tenure needs to be, in Red 2, needs to be the center, absolute center. I also heard Justin's talking again about the very significant issue of indigenous people's rights, community rights. And I do think, by the way, that the movement of indigenous rights and community rights really came alive with climate change and with Red Plus, from my standpoint as a policy person, and changed the whole profile of the relationship between people and forests. And we have a lot to be grateful to that community for that. But I think, and I also was interested in the comment that was made that we can't just be talking about forests with these issues. We're talking about the whole landscape of natural resources and the whole range of issues that are affected by land choices. And so we heard about land grabs and carbon grabs, and those are concerns that in particular countries are more of a problem, but are really if my own country, the United States, is any indication, at risk pretty much everywhere. So can I please take, yes, the microphone to this gentleman here in the center?
Nick Pyatt, Founders Forestry, and could you, the panel, say where you think community land rights are already or within touching distance of being RED ready?
Okay, let me ask Mr. Espinoza first, because he's at a disadvantage being on the screen here. Yes, could you repeat the question because he had his earphones off? Thank you.
Where do panel members feel that community forest land rights are already or within touching distance of being RED ready?
Los derechos a la tierra comunitaria. ¿Están estos derechos ya preparados para RED?
¿Respondo ahora inmediatamente o después?
Shall I respond now or afterwards?
Yes, now please.
The land rights aren't ready when it comes to the focus. Right now there's a focus on land rights or community land rights, the different community plots, but the indigenous people can be found in a number of different communities. We need a more updated structure. But what the government has done has sectioned off the different areas and has created different community plots. There's also a tendency to divide off this land on a family or individual basis. So it's difficult to understand the concept of land ownership because of the way that the land has been parceled off. In the Convention 169, there's a focus on collective land, which needs to be managed more effectively and more holistically. The natural resources need to be managed more holistically as well.
Thank you very much. We only have a couple more minutes, so could I ask you each to briefly address that question, and then I'm very sorry for everybody else. I think, do we have any wiggle room at all? No. Sorry. Please.
Okay, John, if I can answer that. I would think the short answer is that all of the plan review projects have these of these community land rights are RED ready, if not beyond RED ready. But I would say in general that I think I agree with Jan that we in the community forestry have to thank climate change for bringing rights and tenure to the to higher up in the agenda. But it's also increased the volume of those who we know have always been sceptical of community forestry and that whole agenda. And they're still there. They're being noisy. They're saying communities can't do this. They're not responsible for this. All the same voices we've heard, they're getting louder. And if you forgive me, I'm calling them rednecks. I'm sorry if that doesn't translate, but and they're really making me angry.
Ignorant, but I accept the word. Thank you. Let's see, in sequence, Daniel, then Tunde.
Sure, I think nationally, certainly in Mexico, in much of Brazil, but not all of it, particularly the state of Acre, I would say, certainly. And I'll leave it at that, areas that I'm actually more aware of.
Thank you, Tunde.
I was struggling to think of, a country that would be exemplary, and I can't think of any. But I think, the Red Agenda has really brought the land tenure and forest tenure issue back to the fore, and there's some interesting debates happening in different parts of Africa, certainly in Tanzania. And in Ghana, for example, there's been a lot of debate around forest tenure and carbon rights, and whether, for example, if you look at a forest, if the carbon under the soil belongs to a community, because in Ghana, like a lot of ex-British colonies, carbon rights, anything underneath the ground belongs to the national government, anything above ground belongs to communities. In a lot of African countries, land tenure is a very thorny issue, and a lot of people have been saying, let's try and divorce the issue of forest rights from land rights or land tenure. Let's not try and go down the thorny, difficult path of trying to reform land tenure, but let's try and see if we can kind of create a form of community forest tenure which doesn't get bogged down in the weeds of land tenure reform. So Ghana, for example, already has some precedent. They have these community reserves which communities can apply for in order to have ecotourism rights, and they're looking at adapting those to entrench people's forest rights instead.
Thank you. Thank you so much to Justin Kenrick and to the 4 gentlemen on the panel. And we really appreciate your thoughtful input. And I believe now we break and for lunch, and looking forward to seeing you this afternoon. Thanks, everybody.
I'm pleased that we were able to give more time to your questions for that last panel. So thank you very much for your patience with us, and also for eating quickly and coming back. Next up on the agenda is a presentation or comments by Mr. Gregory Barker. Now, Mr. Barker is the Minister of State for Energy and Climate Change here in the UK. And I think we all know what an important role the UK has played on the international scene in climate change, as well as in forestry, for quite a while. Unfortunately, Minister Barker suddenly fell ill on his way over here and had to return for some treatment. If he feels better quickly, he'll come back and join us this afternoon. But just in case he doesn't, he's asked some of his colleagues to come present his comments to us. So we're very fortunate that we're going to hear what he had to say. And then if he manages to feel better, he'll be back with us, and he very much looked forward to interacting with you and regrets that he's not able to be here with you. But let me say a few more things about Gregory Barker, because it's important, I think. He obviously is the Minister of Energy and Climate Change. Important role. He's been active in the environment and energy for quite a long time here in the UK, and served on lots of committees, the Environmental Audit Committee between 2001 and 2005. And obviously continues to play a leading role in the UK, shaping the UK's policy on energy and climate change, both domestically and internationally. So we're fortunate to have with us Mr. Peter Clutton-Brock, who is a policy advisor on forest and land use at DEC, the Department for Energy and Climate Change. And Peter's going to channel Minister Barker for us and read his comments, and we appreciate you doing so. Peter, why don't you come on up?
Thank you, and again, the Minister apologises for not being able to give these comments in person. So I'm just going to be reading out what the Minister would like to say. Thank you for inviting me to talk to you today. The topic of this conference, REDD+ finance, is timely. Increasing the speed of REDD+ finance dispersal needs to be an international priority. At the same time, we need to provide confidence that long-term finance for REDD+ will also be available. But before I talk about REDD+ finance, I would like to start by paying tribute to Wangari Maathai, who passed away last month. Dr. Maathai understood that which many struggle to reconcile, that social and economic progress must go hand in hand with environmental protection. The Greenbelt movement, which she founded, has planted an estimated 45 million trees around Kenya. This achievement is all the more remarkable as it created rural jobs and offered women an opportunity to develop new skills. Genuine green growth in action. Her vision, persistence, and determination to make progress, often in the face of opposition, inspired those she met. And as a result, her legacy will go far beyond her own accomplishments. The opposition that Dr. Maathai encountered is part of a larger picture. History tells us that as countries develop, they cut down their forests to make way for agricultural and industrial expansion. Later in the development cycle, deforestation slows, plateaus, and decreases as social priorities evolve. Immediate concerns about food, shelter, and security make way for longer worries about including environmental ones. Today, many developed countries have gone through this cycle. They have stable or even increasing, albeit low, forest cover. Many developing countries, however, are in varying stages of the transition. And there is a choice to be made: business as usual or a new, low deforestation development pathway. Forests support 1.2 billion of the world's poorest people, harbour over 80% of terrestrial biodiversity, and deforestation results in about 17% of global greenhouse gas emissions. Whilst the value of the services provided by forests may not always be captured in the market, that does not mean the markets do not rely on them. They do, and governments are starting to realise that the only real development is sustainable development. The good news is that we are making progress. In Cancun, we agreed a framework for a REDD+ mechanism, and we will develop design guidelines for the key elements of that mechanism at Durban. We have developed FLEGT agreements and supported work on sustainable commodities to ensure that unsustainable or illegal commodities do not undermine sustainable and legal ones. There is a clear direction of travel. Deforestation is going down, but not fast enough. On REDD+ finance, money has not been dispersed as fast as we would like. Only a fraction of the 4.5 billion or so committed for REDD+ has actually been delivered to where it is needed. We need to speed things up, for example by harmonising indicators by which REDD+ projects are assessed, and by agreeing in Durban to robust guidelines for forest monitoring systems and reference levels against which progress on REDD+ can be monitored. Forest countries will need to act quickly to create these systems. Once set up, these will open the door to large-scale finance transfers for measured reductions in deforestation. Donors need to realise that traditional project-based aid is too slow. Strategic interventions will be needed. There is also an onus on forest countries to demonstrate real cross-government support for the reforms needed to make REDD+ a reality. Speeding up dispersal is an immediate concern, but we also need to build confidence that REDD+ finance will be available in the long term. We can do this by making progress on the wider discussions on long-term climate finance. The AGF report that showed that developed countries can meet the goal of mobilizing $100 billion by 2020 can be done. It's not easy, but it can be done. The focus for this year is on increasing lending from multilateral development banks, working with international transport systems, and leveraging private sector finance. And we're working through bodies like the G20 to make things happen. There is regular discussion about whether REDD+ about including RED Plus in the international carbon markets to harness private sector investment. And this may indeed be an option in the future. But more work needs to be done to determine the preconditions that would need to be met to make this possible. And we must be aware that such an approach may incentivize unfair allocation of land tenure. However, if implemented correctly, RED Plus can act as a trigger to resolve land tenure conflicts. Securing land tenure can provide those with limited means with enduring natural assets which they can improve and bequeath to subsequent generations. This approach to poverty alleviation, contradicts those who say that the poor face a choice between higher incomes and a better environment. That is a false choice. And regardless of whether or not RED Plus enters the carbon market, securing fair land tenure must be the foundation of RED. Not just for ethical reasons, but because it is crucial in attracting private sector investment. Unclear asset ownership creates a real problem for investors. In addressing the gap in funding for RED Plus, the UK is playing its part. Since I last spoke to you, an independent review has been published on the options for how we can best direct UK finance for forests. Many of you may have read the review and commented either at events organised by UK officials or on the DEC blog. Thank you for all your advice and help so far. It is much appreciated. We agree with the thrust of the review, that increased funding from the multilateral funds should be complemented with strategic bilateral partnerships and a focus on working with the private sector. We are looking to create a balanced portfolio, covering countries in different regions and at different stages of development. We are now scoping out these options in more detail, starting with the countries identified as priorities in the review. However, we will not limit ourselves to these if transformative opportunities offer themselves elsewhere. We are still at the start of this process, and decisions have yet to be made. We will be looking to engage with all interested parties throughout the development of our programme. But no matter how much RED Plus finance we raise and deliver, it will be ineffective unless it addresses the drivers of deforestation. Growing and developing populations are increasing the demand for agricultural products and hence land. Without strategic investments and legal reforms in forest countries, RED Plus finance will struggle to outcompete the financial incentives created by this demand. Any RED Plus programme must operate in collaboration with the key supply chain and agribusinesses companies to reform supply chains. Companies such as Unilever are pushing the envelope in this area with their commitment to remove all unsustainable palm oil from their supply chain by 2015. This could be interpreted as a great act of corporate responsibility, but perhaps it fits better into what Paul Polman, Unilever's CEO, would call long-term capitalism. Donors need to work with other companies that use commodities such as palm oil, beef, soy, and other commodities in their supply chains so that they too can set similar targets. Looking forward, next year, world leaders will meet in Rio to push forward the agenda on sustainable development. Such events occur only a few times in our working lives, so we must seize this opportunity to drive forward our work on forests, to increase the disbursement of RED Plus finance, to offer confidence in the availability of long-term RED Plus finance, to combine efforts on RED Plus with private sector supply chain initiatives. If we manage it well, we can orchestrate a perfect storm of incentives. Governments need to step up, companies need to step up, NGOs need to step up. The challenges we face are not new, but we must be the ones to solve them. Thank you.
Thank you very much, Peter, and please express our gratitude to Mr. Barker for those comments. I expect that they'll be made available, publicly available, for you to read with interest later on. he had very limited time, even when he was going to be here. But I was planning to ask him a question, and that is the same question we basically posed all of ourselves today, and that is that we've been at RED for plus or minus 4 years. What lessons has he learned from this experience, and what mid-course corrections would he see that we should all consider, and what might be the new priorities for investment? So we actually fed that question to him before, and he had a little bit of time to think about it, and so apparently has a response. So, Peter?
Okay, so
everything we do is not quite this staged, but
this is. There are fundamentals that need to be in place. Okay, is this not? No, maybe not. There are fundamentals that need to be in place for a successful RED Plus mechanism, and we have not yet universally achieved them. They include good forest governance, clarity on land tenure, clarity of intent from donors, clear commitment and joined-up approaches to the drivers of deforestation by governments of forest nations. The UK is clear that governance is a vital prerequisite to RED Plus, and we continue to support that, for example, through our Forest Governance Markets and Climate initiative. But as you say, it's been 4 years, and we need to move at pace and act at scale. The biggest focus for me is to identify how to bring in private sector funding, not just in the carbon market sense, which I recognise is some way off, but in their role in supply chains for commodities. And that is one of the major pressures on deforestation.
Okay, thank you very much. So thank you very much, Peter. Peter's a good sport, and I hope the minister recovers quickly. Before introducing this next chair and panel, I have to say that I'm struck by not only in his remarks, but the remarks of every panelist in the first one this morning, the first panel this morning, and many in the second, of how important tenure rights and security are. Of course, that's kind of my day job, my business, so I'm quite pleased with that, but I am struck by how often it's come up as it's not only central to ensuring value, I think Lou Munden made that point, but also essential to achieve scale of new markets, and absolutely essential. But what I'm curious about, and maybe the next panel can treat this question as well, is, okay, what are the ideas about how do we scale up investment in securing rights? So far, and we heard from previous panels, that it's a bit of a side issue in the preparation of the RED programs. Might be on the list of things to be studied, to be done, but not at the scale that's necessary to raise investment. So perhaps this is something that the next panel can address as well. What are the ideas? How do we scale up investment and kind of political commitment to addressing these tenure issues that constrain progress? So with that, I'd like to introduce Peter Riggs. He's the chair of the next panel. Peter is with the Ford Foundation. He's long been active in this arena, primarily in Asia, but around the world, active in agriculture, sustainable agriculture, active as well on trade, and worked for quite a long time on trade. And we're very fortunate to have Peter with us, and he's going to introduce the next panel. And as you know, this is the last panel. Its purpose is to try to help us figure out, okay, where do we go from here? What are the next set of ideas? What's the next generation of instruments to help us be more successful in our attempts to achieve diminished deforestation? Thank you, Peter.
Wonderful. How we doing, translators? Thank you very much for your hard work today. It's a big job. Try to speak slowly and clearly. And thanks very much to Rights and Resources International, Forest Trends, and Forest Peoples Program for putting this together. We had a couple of terrific panels this morning, and I hope this third panel is equally stimulating. So as Andy said, our task here is to describe what's next. A couple of speakers have referred to RED Plus 2.0 or RED 2.0, and that's partly what we'll be focusing on. I will not be asking questions of the panelists. We've invited them here to say what they have to say, so we look forward to what they will share with us. But perhaps I'll say a couple of things to get us started. A couple of ideas out there. So I think from our discussion this morning, we see sort of 4 new emergent structuring features of this environment that we find ourselves in today, 4 or 5 years down the road on RED. Because of the global financial situation, we have seen definitely a retreat to safer asset classes. The flight to value that Michael Jenkins referred to is also a retreat to safety in many cases. So there's less interest now in some of these risky asset classes, and certainly carbon has been perceived as a risky asset class. We've also found that focusing on carbon as the investment vehicle, as the target, doesn't always get you where you want to go, and one finds that it's other kinds of investments that may be most supportive of the carbon sequestration goals associated with RED. And what does that mean? What does that imply in a situation where investors have been asked to clearly focus on carbon because it's a recognized asset class? We also find ourselves, and this is of course without prejudice to the outcomes at Durban, but we find ourselves with some uncertainty about that RED 1.0 vision, which I would submit to you was, first of all, centered on and mediated by the UNFCCC, put nation states specifically as the locus of support for and inquiry around RED. And yes, we may emerge with a green climate fund that has a RED sector stream associated with it. It might be a beautiful basket, that GCF basket. It may also not have very much money in it. A fourth structuring feature, at the risk of sounding a little bit like a broken record, is the central role of land rights, as expressed in safeguards, which is pretty well understood. Also, if one refers to the Cancun Agreement, as expressed by the references to the UN Declaration on the Rights of Indigenous Peoples, which very clearly creates not just the question of stakeholders, but a class of rights holders under UNDRIP. And finally, in the central role of land rights, we've seen the ways in which civil society has pushed this, but also the ways in which increasingly investors have buttressed this concern by saying, yes, as one of the ways to reduce uncertainty, we feel very concerned about land rights and the workout of secure tenurial arrangements. So what are the new ideas? Can I ask at this time, panelists, if you can start making your way towards the front? I would appreciate it. We have 4 panelists, and I hope you'll join us. And perhaps in your remarks, which as I say, we're not going to push questions at you, but perhaps you could talk about your work in relation to a couple of the new ideas that are circulating around with respect to this RED 2.0 or the whatever happens next in this space where forests and climate change mitigation concerns come together. So a suite of things that look interesting, that look like they have potential, and I'll mention with each of them sort of the promise and peril. One is, I wouldn't say new, it's one of these cases where old is new, and this is FLEGT, Forest Law Enforcement and Government of Trade, and the work to clean up the supply chain for timber and ensure legality on the way from the forest to finished product. Work done at Chatham House indicates that actually this is a relatively cost-effective investment in terms of reducing not just impact on forests, but ultimately the Chatham House research costed out a ton of carbon, avoided deforestation as a function of law enforcement dollars spent, and it was seen as quite cost effective. The peril is, well, it's not so much a peril, it's just an acknowledgement that the volumes associated with that are not enormous. We're not getting to some huge global increment of avoided deforestation from that approach, but it's very important, and some of those tools might be applied. A second, Tunde in the second panel mentioned this, is a focus away from the nation-state UNFCCC model to more of the subnational model for REDD. The promise there, I think, is the ability to try a range of new models and approaches. Evolution works. We learn from each other. Different settings require different approaches. The perils, of course, leakage remains a big issue with subnational REDD programs. And one might also argue that a strong focus on subnational REDD will drain energy and attention away from what we still see as a need to push a binding global agreement where nation states are taking targets and working towards that. A third new idea, touched on a couple of times this morning, is in cleaning up supply chains. We've seen, as the minister's remarks have indicated, the success of the commodity roundtables, more and more of which have greenhouse gas reduction targets. A promise there at their initial stage is this market differentiation approach, market access in some cases, price premiums in other cases. The peril, if you will, is maybe that price premium goes away when you go from 20% of the market to 80% of the market, and we have some major buyers who are not yet part of this move towards cleaning up supply chains. A fourth area of work, again touched on by a couple of folks, is the use of degraded lands. And there's two ways to think about the use of degraded lands, I would submit. One is restoration. It's interesting to note that Indonesia has a new tenurial instrument called the Ecosystem Restoration Concession. The Ministry of Forestry, being comfortable with this concession notion, has defined this as an ecosystem restoration concession, and that is one possible model. But another approach to restoration is, I guess we could say it this way. Deforestation occurs in the absence of the sacred, and there is a need to resacralize landscapes, and the process of restoring lands, the convivial processes that implies, can be very powerful and very important, to say nothing at a prosaic level of the local income generating and labor opportunities they may suggest. The other approach on restoration, of course, is the movement of commodity activities which until now have mostly taken a sort of a greenfield approach. That is, they're moving into forest areas, clearing and planting oil palm or pasture, what have you, versus moving those kinds of activities on to degraded lands. Now, degraded lands in generally are post-conflict lands. That could be at a national scale, it could be indicative of local conflicts, but that's one of the reasons it hasn't occurred yet, is because of the very complicated land tenure situations that frequently surround degraded lands. And finally, a fifth area of REDD 2.0 thinking is quite well exemplified by the exchange in the second panel between Lou Munden and Dan Zarin about how one might take a tiered or a stacked approach of certain kinds of goods, but also environmental services and potentially the use of credit markets. How do you align them? How, therefore, do you take what would be otherwise payments that are not transformative, not significant in and of themselves, but stacked together as a livelihood approach that had different income streams, different kinds of security associated with income security, food security, increases in tenurial security, how one might do that. And there's a lot of promise in that. The peril, if you will, is it's really complicated, and we're just at the beginning of trying to figure this out. So just to remind us something we already know, most risk in the system around REDD is risk in the realm of governance, and at the core of those governance questions are land rights and tenurial arrangements. This risk finds its way into projects, Governments face these risks, donors face these risks, communities obviously having tremendous opportunity costs associated with their engagement on RED and related activities. And finally, as conventionally rendered, it is investor risk. To reduce risk in the system is necessary for both increases in public and private investment. And if Dan Zarin challenged us to think about this in transformative terms, then I would submit to you we do need a transformation in our thinking about where the locus of control for land rights is, that we must transform our thinking in a very large scale way, so we think about ownership of forest lands in new areas. And let me now introduce the members of our panel. Macedonio Cortave is the president of the Asociación de Comunidades Forestales de Petén, ACOFOP, I think it's rendered as, a community-based association in Guatemala consisting of 23 indigenous organizations. Jan Martin Dros is the coordinator for bioenergy, palm oil, soy, and sugarcane for the Solidaridad Network, an organization based in the Netherlands that works on creating sustainable supply chains from the producer to the consumer. I'm very happy to see that Mateo Yela Bonqueto was able to join us today. He is the coordinator of the Circle for the Defense of the Environment, CEDEN, based in Equator, Bandudo, and Oriental provinces in the Democratic Republic of Congo. I apologize, I speak not a word of French, so apologies for my linguistic failures. He's worked for the last decade with local and indigenous forest communities on protecting their rights and improving their livelihoods. And finally, Kent Weiler, Dr. Weiler is the Director of Asian Operations for Weyerhaeuser. He joined Weyerhaeuser in 1987 and throughout his career has been focused on managing global timberlands and forest product businesses. Right now he's working on a set of joint venture forestry operations in China and is responsible for the Weyerhaeuser Solutions consulting and management business in Asia. I will suggest, panelists, as I said, I'm not going to throw questions at you, interested in what you have come to tell us today. And we will start with Macedonio Cortave, if we may, and then work towards me in the panel. Thank you very much. The floor is yours.
Management, that for us forest people is one of the alternatives which is better designed for the subject of REDD+. When talking about community forest management, we're talking about talking and sharing with you what are the livelihoods of the indigenous and peasant communities working in these forests. Today I'm also representing part of the Mesoamerican Alliance of Forests and Peoples, which is a series of organizations and people working in this region. So when I'm talking about livelihoods, people's livelihoods, I'm doing so because people rely on forests for their subsistence. Also, we know that forests contribute to global warming. But we also talk about food security. We talk about the food communities. The forest is like a supermarket. It's the warehouses. Because it's where you go and buy and get your materials for building houses and all the livelihoods that we have mentioned before. Our experience in community forest management in Mesoamerica tells us that the input of our communities in management and care of forests is increasingly important. We could compare systems of protected areas where you can't really take advantage or make use of resources. In the case of Guatemala, in the Mayan biosphere, It has been proven that the forest is better protected when it's in the hands of people. There are less fires, and there are important comparisons that we could share with you. Why is that? Because of the benefits that people themselves get from the forest management, because it creates jobs, because it creates opportunities for education, for health and infrastructure, for improving their own communities. That means that for us, forests are, as I was saying before, something extremely important. With regards to RED and its implementation, we would like to share a concern with you, and that is the issue of timings and information levels. That is great challenge. Somehow we really need to level information across all actors, because for some it's going very slow with a surplus of information, and for others it's going very quickly with very little information as well, lacking basic information. Therefore, I think that an important challenge is to balance the information and communication, both from the part of the governments and communities and the other structures working currently on these issues. Next issue that I would like to share with you is how RED Plus must promote, drive, support and strengthen the cost of forest management and care. Looking after the forest, keeping them has a cost. It's not by coincidence that forests are there. It's because of the cultural traditions of local communities and indigenous peoples. Therefore, we think that RED should acknowledge these cultural practices of our peoples, our communities. Investment made by the communities in keeping the forest needs also to be recognized. Forests are increasingly under threat due to different things, bad policies, fires, mega projects, for a series of issues that I can't mention because of time constraints. We are not asking for subsidies or grants for poverty. What we want is investment for the development of the communities, for the development of activities in better forest preservation, and also how to scale up possibilities for livelihoods, making better use or efficient use of forests. We are also asking for recognition of the input made by communities towards forest conservation through acknowledging the rights of those communities on those RED issues. Try to look how to strengthen the development productive activities. An example of that would be that for forest management there is not much financial support. For example, if we're talking about private banking, it is very complex to get access to resources for forestry issues. We need support for the industrialization of projects, for capacity building, for training, etc. And finally, we would like to invite all players and stakeholders who are interested in working in our land. We would like to invite them to listen to the needs and interests of indigenous peoples and local communities, because that is where they're going to finance us. The conservation of the forest or their disappearance depends on these people. Over 25 million people in Mesoamerica work on forest preservation, and we depend on the forest because of all the issues that I have mentioned before. And finally, I would like to share with you that people from the MOCAF network in Mexico and Coordinadora Nacional de Organizaciones Indígenas of Panama are here with me because we belong together, and we are trying to unite our efforts to consolidate the Mesoamerican Alliance of Forests and Peoples, which has several million hectares in the whole of Mesoamerica. And there is a carbon reserve there that if we manage to consolidate our work, that reserve is going to either continue or is going to increase. If we don't strengthen these communities and organizations, those reserves are going to be freed. So we would like to invite all players to join our efforts and come to Mesoamerica to help us continue these efforts of looking after our forests sustainably. Thank you.
Macedonio, thank you.
Muchas gracias.
Just mentioned 4 new things that you've put forward. You've reminded us about the important role of local people in fire prevention, which I had failed to mention. You talked about the importance of information and there being a better shared understanding and a sharing of information amongst all stakeholders and parties in this debate. You've reminded us of the costs of forest management, and you've made a clear and very useful statement about investment, that investment should support forest management, cultural activities, and livelihoods. And finally, we very much appreciate your note about listening to indigenous peoples and local communities, and the way you presented it was to tell us how we might get to scale in doing so. So I think listening to these voices throughout Central and South America as you've come together in a dynamic federation, and you are providing examples of how we can get to scale in this debate. Thank you very much for that. Mateo, I would like to move to your remarks, and thank you very much for being here. Look forward to your sharing of your experience.
Merci beaucoup. Je viens de la République démocratique du Congo, qui est considérée.
I come from the DRC, and it's considered as being one of the countries where we have a pilot project called REDA throughout the world, and I want to share my experience with you of our work and especially what is going on in the country. Currently, the discussions in the countries move forward very quickly, like my colleague said, but the information with the local community is inexistent with RED, and even in RED. What is RED? How does the process evolve? The decisions at the national level, international level, they are moving forward, but at the state there are some things going on that the communities are not aware of. We consider that it's the populations, the forest people, the Bantu, the local communities, and the indigenous peoples who clear the land because of the type of agriculture that they have, and the people who are put aside are not informed. And this is the reason why within our work we tried to focus the energy on the information of local communities and of the indigenous peoples to see how they understand RED, how they see RED, and how they understand this process. what we gathered from these peoples, we did some work in Equator, that we have now spread to 6 provinces in the DRC, and we have noticed that RED is an opportunity and also a threat at the same time. An opportunity because there's financing, there's a financial flux that has been pledged and that arrives. You can see in the country there's a lot of meetings, things are happening around this process. And we see there's a lot of funds that are going to come, which is going to generate development. And we can hope, the communities say, we can hope that it can be a solution for us and we can have financing for our development. We can also see that there are projects there, and in all the projects we talk about alternative to exploitations of lumber, to itinerary agriculture, to lumber, there's a lot of alternatives, and the community says, that's another opportunity because there will be other technologies that are going to come. But I think this is too much hope. RED generated a lot of hope, but will this hope really lead to change? What we see today is that there are projects, that's the case in the DRC, where private funds are helping, because in the DRC there's a private sector that has projects, such as in the forestry sector. There's also the private sector in the concession for the conservation, and there are several private types of works where the financing flux goes through the investment, comes privately and also from public funds as well. So do they share the same view? Does the private side also come to develop the local peoples? Do the public want to bring about development? What is RED doing here at the center? People are asking lots of questions and we are waiting to see the answers, but the risk is to see that the process evolves very quickly and people don't even understand at what level are we at now, where are we going to, what are we going, how is this going to evolve? These are big questions that are being raised as regard to this process. As regards to the communities, like I said, these large questions, these broad questions have not been answered yet. At the level of our country, which is a large country, if you want to go and see the local communities, you need a lot of means, but the process evolves without them being asked. I don't know if this is a way of succeeding this process or not, and that's the reason why we think that the local communities need to be at the forefront, because these communities are the actors in the deforestations. If they don't know anything about RED, then is it a success or is it a failure? So RED can be one solution or a problem. That's a question that we are raising, and with regards to the various alternative solutions, that will we have enough means to go about? Because the forest people is not a small people. If you look throughout the world, the forest basin, they are enclaved in there, and if you need to invest to help them so that they can understand the RED process, then we need financing. So you need to have a lot of means that are ready, and we suggest that it is aimed at informing local communities. Do we need to encourage, and here I am actually talking about to those who have projects and who have means to do so, do we need to encourage only the investments that come from the private side or from the government side, or also to go towards the local communities and to ask them questions and to ask them what do they want? What do the communities want? What the private parties bring, what the local governments bring, and they have their needs. They have their projects, and what we see at home is we do not listen to the communities. We come with the projects, but we don't listen to the communities. Are these projects that can help them to solve their real problems, or are these projects because RED exists and because there are existing funds? So then we need projects so that we can use these funds. We do think you need to go to the forest, to reach out to them, to the forest communities, and to ask them what do they want, what do they need, and not only to see what we want to bring them. It's a challenge. And I think it is a very important problem for us. And I was late today, but I managed to see the panel before and who were talking about land tenure. And I don't want to come back to there, but I understood that it was already finished. But the right to the forest carbon, the fact that we have the soil rights, that's another question that can be raised. That needs to be dealt with at an international level. This property right for the carbon, who is it going to belong to? To the one arriving with the project or the one owning the forest? Because all this depends on your point of view. And even the MRV, when you're going to measure the carbon, I think that something needs to be clarified there within the property right of the carbon. So I'm going to stop here. Thank you.
Matteo, thank you very much for these remarks. I was struck that, like Macedonio, you have also emphasized the listening and the learning, the need for dialogue between private parties, local governments, and communities. And you highlighted a problem that, in a very different way, Benoit Bosque highlighted this morning, which is this question of disbursement and the speed of activities, and is it appropriate to move quickly forward before such time as there is shared information, before such time as that dialogue could occur. We're also grateful to you for pointing out that this issue of rights to carbon is a new area. It's new in international law. It's new in national law systems. The creation of a property right to carbon is a process that will need a lot of study and discussion and exchange between private parties, local governments, national governments, and communities. And finally, I was very struck by your use of the phrase alternatives to exploitation, as though exploitation were the norm and what was being suggested was an alternative to that. And this is clearly something we would all be working to change, that the norm would be exploitation and the avoidance of exploitation would be something else. Let's hope that we can work away from a paradigm that puts exploitation in the middle. So we move on now to Jan Martin Dros from Solidaridad, who's been doing some very interesting work around commodity roundtables and greening supply chain. So Jan Martin, the floor is yours. Thank you.
Okay. I've put a few images on screen. It's just that the screen is not in front of me, so it is going to be an awkward presentation, me just switching attention to the back and the front. Solidaridad is one of the pioneers in fair trade, but we soon discovered that a niche approach targeting conscious consumers willing to pay more would not service 100% of rural farmers. So since we pioneered fair trade in the 80s, we've been looking to get sustainability, social as well as environmental, entrenched in mainstream markets. One particular avenue in which we've tried that is through commodity roundtables, working in a pre-competitive atmosphere or a pre-competitive setting with major producers and traders and processors of big tropical commodities like soy, palm oil, coffee and cocoa, to actually address the negative impacts of the production and especially expansion of these crops. We've done some learning there as well, because when we started this like 10 years ago, this was a buyer's market. So basically, producers could be told not to clear forests or to respect human rights. Otherwise, we would just stop buying the stuff, the kind of boycott approach. Things have changed radically over the past couple of years. It's become a seller's market, so the producers are now questioning the roundtables and ourselves what's in it for us. Just market access isn't enough in a world where markets are fighting to get access to vegetable oils and proteins. So going to the first slide, or the second one. There's a button somewhere, I guess. Am I permitted to stand there?
Yeah, sure. I must be this way.
That would make things easier. I've got something in front of me. We have been forced over the past couple of years to look for incentives to actually stimulate farmers to join these sustainability initiatives. At the same time, we're looking to, at these roundtables, to be inclusive, to avoid smallholders to be kind of squeezed out because of stringent requirements on certification, for example, or on product quality. In parallel and away from the focus that I particularly had, this red thing came to life. And there's been a lot of, I think, hugely interesting conferences and stuff happening. And at a certain point in time, avoided deforestation popped up as kind of the lifesaver maybe for the climate debate. And that's where it started to get interesting, because the roundtables require producers to avoid deforestation and actually prove that and monitor that through a certification protocol. But it doesn't provide any payment for that. A producer of responsible soy or palm oil gets paid per ton of soy or per ton of palm oil, regardless of the volume of biodiversity, water, or carbon preserved on his farm. So under a low emission rural development agenda, it would actually be possible to merge these things. Farmers would not only be paid for a responsible or sustainable commodity, but also for their contribution to maintaining carbon or biodiversity on their farms. And it's been said a couple of times, I think, today, without agriculture as being the largest driver for deforestation and the largest emitter of greenhouse gases probably in the world, we're not going to solve this climate issue. So both RED and roundtables restrict deforestation, but RED doesn't have strong farmer engagement, and the roundtables don't have resources or funding available to actually encourage good behavior. And both RED and roundtables have some social and environmental safeguards in place, but I dare say that the roundtables, after 8 years of experience, have practical experience of implementing stuff like free, prior and informed consent, having conflict resolution mechanisms operational. And although it's very clear that these are not perfect, it's a lot better than the way the forestry, palm or soy industries were governed 1 or 2 decades ago. So this is a theory of change that we operate in. On the top end, there's jurisdictional approaches, red markets, global facilities. Where Solidaridad is placed is basically at the bottom part. It's farmers and the interface between farming and carbon stocks of forests in the production areas. And as we said, we can't meet red targets, we can't avoid deforestation without getting agriculture on board. We think red cannot compensate all of the opportunity costs that come with not expanding farming, but it can be one of the elements to have this transformation. So a short example before I stop on how Solidaridad and our partners work to link the commitments of RED to the uncertified farmers to come to low emission farm sectors, which as a kind of a spin-off would also result in increased productivity on planted land, which would reduce the need for future expansion. So it is both a direct and an indirect contribution to reducing emissions. This is how we intend to link up the existing supply chain programs we do, for example, in the beef and soy sectors in Brazil. Markets demand responsible beef and soy and pay for these certified responsible commodities. But at the same time, the avoided deforestation achieved by these producers through adherence through the commodity standards is remunerated through a RED funding mechanism. Now these are thousands of farmers, and to set up a VCS or similar monitoring or recording scheme is very tedious for an individual farmer. So that's where farmers' organizations and the roundtable secretariats themselves come in to aggregate thousands of farmers to make these systems cost effective. This way, the costs that can be borne by the private sector as part of either carbon avoided deforestation or sustainability commitments can be paid by the private sector and can be kind of built through to the consumer. Those parts that relate to improving governance and improving methodologies to make this more efficient, those can be kind of financed publicly or through grants. And over the next years, in a consortium with Forest Trends, WWF, IPAM, and the roundtables, we hope to pilot this, develop tools that would enable the roundtables to actually quantify the carbon and other environmental benefits of certified production, and hopefully find some way of having that approved by RED systems as a way to provide incentives for those farmers that are trying to do the right thing, something that was brought up in the first panel. So I'm available for questions afterwards, I think. Thank you very much.
And thank you very much, Jan-Martin. Thanks for, I think you did a couple things that were very interesting. First was, you're really talking about market transformation. You started with fair trade, and you're talking about moving into these mainstream markets, and that is the scale of ambition that's needed. You reminded us that we're now in a very different setting with respect to market demand, that we're now in a seller's market as markets are searching for available product, and this puts pressure on the certification and price premium issues. Very happy you mentioned your use of FPIC. I think the whole debate about FPIC has been a very strong focus on RED, which is appropriate, but not appropriate if we're not asking the same questions of other kinds of interventions at the landscape level. So to know that the roundtables are talking about FPIC is extremely good news. And finally, I think the way you frame this as in the roundtables that avoided deforestation is a requirement, but avoided deforestation is not yet paid for, and you've outlined a scheme how that could happen. Quantifying avoided emissions is a big step forward for all of us. So thank you very much. We will move to our last panelist, Kent Weiler, who again is the Director of Asia Operations for Weyerhaeuser, and the floor is yours.
Thank you. It's nice to be here. I'll focus my comments on one idea. Won't work everywhere, but I think it could work in a lot of areas to help promote livelihoods and reduce emissions. And that is centered around electricity. We know that from years of experience that one of the best ways, maybe the best way, to reduce poverty is to get electricity to those people, and it has huge enhancements for their lives and for their livelihoods. And I assume most of you are familiar with those materials. If you're not, Google rural electrification and you'll get enough to read for a month. It's a lot of work done in that area. Most of the people who are without electricity are in sub-Saharan Africa, Southeast Asia, and India. So we have 1.5 billion people who still don't have electricity. Okay. Now, if you take where those people live and overlay that with a map of net primary productivity, which is a proxy for biomass growth, you'll find that these people live in areas, no surprise, really I don't think, that are very conducive to growing products, and particularly growing trees. Okay. take another map, overlay that over another map like WRI's map on degraded forest lands, and it's also the same areas where there's huge amounts of degraded forest land. So a solution, possible solution, seems to be that you could take some portion of that degraded forest land, convert it to high-yield plantation forestry that provides fuel wood for locally sited electricity power plants, biomass power plants. Okay? So there's a lot of potential benefits with this. For one, the technology, combustion technology is well known, but there's also some new technologies in pyrolysis and gasification that could apply. It can be scaled for local needs and conditions. So you could have a very large project or a smaller project. It will reduce transport costs and emissions because the fuel is located next to the power plant. It can be combined heat power operations are going to be more efficient, and then that will also provide heat that can be used for other types of industrial development. It provides permanent rural jobs, maintaining those sustainable forests, and it's very conducive to, and in fact I think has to be, community-based forestry. In addition, because of the plantations can have a flexible silvicultural regime, depending on what the opportunities are, you might choose to grow different species, grow for different lengths of time to provide a variety of different forest products. Wood-based, biofuel or biomass-based power is cheaper than oil and diesel. It provides energy security for countries. It reduces their forex payments, reduces carbon with the growing of the trees, and it restores those degraded lands, which improve soils and reduces erosion. So there's a lot of potential benefits here. Particularly, we know that establishing some type of economical industrial timber markets is a vital element in sustaining forest and avoiding deforestation of the remaining natural forests. Now, despite how good I think this opportunity is, forest products companies, and I think I can speak for power companies, will not take the lead on this and will not do the investment on their own. Why? Well, for one reason, because it needs to be community-based forestry. So, for example, a company like my company, Weyerhaeuser, is not, if we come in and try to establish this, then we're just grabbing up more land, right? So it's got to be community-based forestry. It's high-risk, low-margin business, biomass production. The power could be high-margin or a better return, but producing biomass crops for power is a low-margin business. And the power companies will want secure supply. They'll want to know that the plantations are there and are going to be able to yield the amount of raw material they need before they're going to invest in the power. But once you got this established, it could be a great opportunity for investment. There's, as Lou mentioned this morning, there's a huge amount of money available. Most of it's pension money. Maybe I shouldn't say most of it, but a lot of it's pension money. Very conservative, but it wants stable income, and it wants to invest part of its money in forestry because it's it's a good counter against inflation. So there's money that wants to invest in forestry, and currently it's all focused on a few forests in North America, Australia, New Zealand, Uruguay. So this large amount of money is bidding up the price of these few forests around the world and driving down the yields on those forests. So they would welcome the opportunity to invest in more forests around the world if they're established and they're well run. Although I say this needs to be community forestry, one of the problems with establishing plantations and community forests has been that they've never been able to achieve the yields that are needed. And so I think there needs to be some, I shouldn't say never, but often not able to achieve the yields that are needed. So there needs to be some type of forestry expertise and plantation management expertise in the beginning to help train up these communities and develop the forest. Once there is confidence in the ability to create and environmentally sustain this supply and deliver this power to the communities, I think it could be a very powerful concept that could take off. But it's going to need some type of public-private financing arrangement that mitigates those initial risks and acts as a catalyst. One thing about the power is that it can bring scale to it as a concept that everyone organizes under, where each particular project may be too small for any one particular investor, but as a combination, doing multiple projects in multiple geographies, it could accomplish the scale needed to attract the type of investment we need. And that's my comments.
Thank you. Thank you very much, Kent. Well, I think we have some very interesting ideas from all of our panelists about scale. Just presented was ideas around biomass-led electrification. Jan Martin introduced ideas about working with farmers on carbon sequestration in commodity landscapes. Mateo talked about new forms of community dialogue, particularly around carbon rights. And finally, Macedonio talked about scale up through basically the federation of community-managed forests into these larger landscape units. For our remaining time, we would like to explore new ideas from all of you. Andy White made a good comment when he was talking to me about this session that, pretty much anybody in the room here today could present new and exciting ideas on such a panel. So if you have ideas you'd like to share and or you have particular questions for the panelists, please, we'll use the same process before, take a couple of questions and then ask our panelists to respond. I see one hand in the back, so we'll start with a gentleman in the back.
Mi nombre es Gustavo Sánchez.
My name is Gustavo Sanchez and I represent a peasant indigenous organization from Mexico called MOCAV Network. I am a colleague of Macedonio in the Mesoamerican Alliance, Forestry Alliance. So I have a question for the panel. Taking into consideration that the peasant and indigenous communities are the communities that maintain the forest ecosystems, how should rights to carbon be legislated? How should rights be drawn up, or legislation on rights be drawn up? And donor governments and organizations like the World Bank and civil society, are they able to lobby receiving governments like the government of Mexico to open up a dialogue and to include communities and indigenous people and peasant communities so that their rights are respected at all times?
Other hands, other questions? Yes, please, in the middle. Here. We'll be provided with a microphone. Thank you very much.
Hi, Ray Durrani from World Wildlife Fund. Thanks very much for the panel. At the risk of bringing up another elephant in the room, I think one thing that I don't think has been brought up is the role of consumption. We talk a lot about the population growth, and people have stated various figures. But what's more striking to me is the divergence in the consumption patterns of that population growth. I was hearing the other day a child born in the US is going to have a 300-time carbon footprint or something than a child born somewhere in India. And I think this is the issue that also needs to be addressed, whether you're talking about beef, so it's changing, food patterns, or whether you're talking about soy or the extractive industries. I know we're doing a bit of work on this, but I was wondering whether other work is being done on this, what people think, and how do we integrate that with the sort of production side of the roundtables and so forth.
Great. Well, this is one of those moments where it's nice to be the moderator, because I can turn to the panel and say, will you please deal with these incredibly difficult questions? One on legislation of carbon rights, and the other, any comments you may have on consumption. And Macedonio, maybe we can start with you.
With regard to the carbon rights, we believe that those rights should belong to those who maintain and look after the ecosystems. As I mentioned in my presentation, managing the forest, looking after the forest, maintaining the forest entails a certain cost, some cost of opportunity, which is significant, and in Guatemala this is actually a very important debate that we're having because we work in protected areas, and at the moment we are talking about a project, and I would say that rights represent a bottleneck right now for us. So I would say that carbon rights belong to the indigenous people and the communities that maintain the forests. It's a dilemma when we think about carbon rights and whether they should belong to the landowners specifically, because then we have to take into consideration property development and real estate. But I think it all boils down to those who manage ecosystems. This is a double-edged sword if we go and think directly about those who own the land. And the other question, I would say that consumption is something that is harming a lot of communities. We are using our natural resources, but we are not giving anything back. We're not having the same influence as before. Lifestyles are starting to affect the countryside, and this is a challenge that we will have to face, and I don't know whether we have an answer here in this room. But this is an issue that we will surely have to deal with in great depth in the future.
I would like to answer the question about carbon rights. If you look at the investment, the person who has the land, if you take the example of the law in our country, in DRC, the person who has the right to the land, the person who builds on your parcel of land doesn't own the house. You have the right on the land, and you have the right to the property that is on that land. And so you have the right to what is built on that land. So the populations, the forest people, because of their nature, are in the situation, the carbon, that's the forest carbon, or even if it's not biomass, the people who are there, and they've been there for a long time, in principle, they should be the owners of that carbon. And if there's somebody who, whether it be from the private sector or from the public sector, finds people, they find the people in the forest with the carbon, and if you have a situation of co-property where you can say that people have the carbon and the person who comes along with his money and brings the technology, you can then share the booty, so to speak. But the person who comes with the money might take possession of the carbon, and this isn't going to improve the situation of the people in the forest. They're almost like slaves in the forest. I'm sorry to use that word, but I'm not really exaggerating when I call them slaves. They've been there for many years with the carbon, but they're going to see the carbon going out and being sold by people because people came in with the money to be able to take it. And that's an injustice. And I think we should say that the people have rights right to have that carbon as well, and maybe the people who come along with the money as well. So this is something along those lines that I'd like to say.
Merci. Je voudrais vous poser une question un peu plus profonde. Les droits, nous pouvons les appréhender dans nombre de choses. L'un des droits
as collateral for certain kinds of activities, but it also might include the right of sale. And if carbon rights are given to communities, Macedonio and Mateo, are you worried about that right of sale being manifested at the local level? That is, if one could take that carbon right and at a community level and sell it. I think, Mateo, you were referring to a situation where outsiders were coming in and taking that right. But is that a concern? Could you, either of you, speak to that?
Precisamente, sí, a eso me refiero porque...
Yes, that's what I was talking about, because one of the issues I mentioned was the issue of the lack of information or the imbalance in the information. And I know of experiences where people from the outside have come to offer very attractive amounts for the land because they have the information on how much that land could be worth at a later date. And the local people just don't know about those kind of initiatives. And I think that the confusion there, or the doubt, would be whether the carbon right would belong exclusively to the property deed. So the question here is whether communities could fall victims of the market, in this case of the land and of course the carbon.
Oui, je pense que je regarde plus la perspective.
I think I'm more focusing on the external perspective. The communities are there. I come from Africa, from the forested zone. People don't even know that a carbon market exists. And I can tell you that in a zone where we work, in an area that we work, one of my colleagues went on the field and asked, do they know about the carbon market? And people thought that they were going to sell their air, what we inhale. And they said, when were you selling that? When you're going to sell it, what are we going to be left with? That means that the carbon market is not understood. And what are we going to sell? What is carbon? We don't see carbon. It's air? What is it? It's complicated. So we're in this market lodges, something that we don't see, we don't apprehend that well. So will the communities be well advised to enter in this rush to sell carbon? I think this goes beyond them. Where do we find carbon? What is it? It will take a lot of time for the communities to apprehend what carbon is and to identify carbon, whereas people who come with projects, they already understand something. They have formulas and they know here there's so and so much carbon that is sequestered here and here. They're very well informed, like my colleague next to me said, and they're coming with money, with funds. So they come with funds and with projects. And what is important is that they have the right to sell the carbon. And this is where things get complicated, because you have the communities who don't understand what is at stake. And people come from outside. They know very well what is at stake. They come with the funds and they're going to own the carbon, and there's a lot of injustice. And at that level, I believe that if the discussions evolve where you consider that the communities do have a right, I am not saying an exclusive right, but they have a right to own that carbon, and the people who come from outside, that they negotiate with the communities, I think that is already something that could work. And then the communities can say, here we have a right to do this, and we designate somebody who can sell it. I don't know how this can work because I don't fully understand this type of market, but I'm just trying to understand it. I think there will be intermediaries and so forth. But if the communities have a right, then they will distribute the money. It is our carbon. You helped us to sell it. Give us back the money, and then we will see how much we will share. But if it's the other way around, then we will say to the communities, look, you're here, you've been here forever. What have you done? I have talked with a project manager, and they said, we're going to invest. We need to guarantee our investments. We need to have the right to that carbon because we brought the funds. We're going to sell the carbon, and we're not going to discuss this with the communities. It is our carbon. We are the ones who invested in it. Is it fair?
Consumption.
Yeah. It's hard to imagine a world with 9 billion people that consume as much as the average European or American does, but a lot of fellow NGOs of ours and yours, including WWF and Solidaridad, have been trying to change consumer behavior, consume less, consume more consciously, and the impact on overall consumption in the West has been limited. I think we're leveling off in terms of consumption in food, just because we can't eat physically, we can't eat much more than we're already doing, and we're just jogging more to get rid of the excess fat, and that's emitting a lot of carbon dioxide as well. And we're using more mobility, and even, I mean, greening our mobility with biofuels or green electricity or whatever. Energy consumption in the West is still growing. So yes, it is important to keep sending out the message that this is unsustainable, but it's a very hard sell to India, China, and Africa to say, well, you should keep your footprint to 1% of what we're doing, otherwise we're all going down. So we kind of are bracing ourselves for a worst case scenario where India and China are kind of getting to the Western consumption patterns rather than us adjusting to the physically more sustainable consumption patterns of these emerging countries. Which means that I think the real challenge is not, or it's an impossible mission to try to reduce consumption over the next 2 decades. And there is a sense of urgency because a lot of forests are now being destroyed, removed, urbanized, agriculturalized, mined. So we have to get more from less. We have to get more resources from less land. Otherwise, the kind of grasshopper, locust approach of opening up new lands, degrading them and abandoning them will basically end up with all lowland forests within a decade or so. So, point taken, I think all of us should start consuming less and participating through the web, although that's not perfect either in these kind of conferences. But I think the short-term challenge is to have more products available for the billions that are now kind of reaching a middle-class life without, while consuming only 10% of what we do in the West, talking about countries like China, India, Indonesia. And that's where population growth and wealth or increasing welfare are actually happening at this point in time, and I don't think we can deny anybody a basic level of mobility, of shelter, of food, of nutrition, and it will have to be produced somewhere, even if we slash the Western consumption by half.
Everyone in the room probably knows more about legislating carbon rights than me, so I'll pass on that question. On consumption, I'm going to have to agree with my friend here. We definitely need to reduce consumption in the U.S., but in a free market economy, and particularly an economy that's driven by consumer consumption, it's hard to do that without impacting growth. And so I see the dilemma. Tom Friedman has argued for a long time that the U.S. needs to implement a gas tax to raise the cost of gasoline, and that will naturally, in a free market economy, lead people to use less gasoline. That's one way to do it, but the costs have got to be raised in order to drive down consumption. I don't know how else it's going to happen.
We have time for one more round of questions and comments, and then I'll turn it back over to Andy. So, any hands?
Hi there, Mike Riddle from Bioclimate Research and Development. I had a quick, I suppose, comment about the relationship between rights and local level governance. We're working in southern Cameroon on 2 community PES projects, and these are communities that have long-term rights to their forests through the community forestry mechanism in Cameroon. These are communities that have the potential of gaining some kind of PES funding, and we're slowly working with them to build capacity in the communities. But despite these rights that they have to their forests, they're faced daily with local loggers, with other logging companies who are cutting within their community forests. They're faced with intra-community dynamics. There's very limited influence of the state to enforce the rights that they do have. And the main right systems that work in their communities are social cultural norms which dictate how resources are divided between households, individuals, and people from other communities. I suppose my comment is just that the right is obviously one stage that's been discussed a lot in the Red debate. Local governance, reinforcing local governance, understanding social cultural norms and institutions which govern access to benefits and power relations is another section that still requires a lot of attention. And these communities are in need of support from whether it's local NGOs, they need legal support, they need capacity building. There's so much more that needs to be done on a local level. And I just wanted to add that in at this stage. Thank you.
Thank you very much, Mike. Hand, Jan.
I'd like to ask, I suppose in particular the gentleman from Weyerhaeuser, many of us in the policy arena and forest, after working many years, that have come to the conclusion that we have to deal with the entire landscape. Some call it ecosystem approach, others call it the landscape approach, but whatever you call it, it's dealing with all of the natural resources, the communities that live in them, and the whole terrain. In terms of trying to plan, and with Rio Plus 20 not very far away, with very few expectations for what will come out of Rio Plus 20. One question would be, is it feasible that we in the forest community could start to talk about how to work between the forest sector and forests and the other issues? We do talk a lot about, in the forest area, about the benefits that forests provide for water or for biodiversity or for other functions, but we have not so much figured out institutional ways to work in a way that changes the way we interact practically. Now, a company like Weyerhaeuser, from what I understand, has changed quite a bit in the last 20 years since the Earth Summit. You started out as a company that owned forests, and you've actually really developed and changed, or at least your entire community has worldwide during this 20 years. And I'm wondering if you or any of the other panelists think that there's maybe some business rationale or practical rationale from the field, from the everyday side, to thinking more broadly than just about forest, but thinking more about the entire landscape. Thank you.
Let's take one other, two others, and then we'll...
Arturo Santos from IUCN. Just a quick comment. One of the main problems discussing about on rights about the carbon is that the main issue is stated not if it's a consultation process, but it's a legal matter. Yeah. Because the framework, the legal framework of the forest was done 15, 20 years ago when we were not talking about environmental services. So a lot of the legal framework says that the communities are in right or entitled to their goods, but not the services. So that leaves a huge gap regarding that legal framework scenario. So it's not if they're consulting if the community should be eligible for the benefits of a carbon, it's that the legal framework does not allow it. That's one concern. The second one is that there's a huge competition between who should get the benefits from the environmental sector of government and from the people in the communities. Both of them are lacking of resources. So environmental services are trying to get whatever funding they could actually gain because government are pushing them forward in order to reduce the rates of deforestation, but they don't have the resources to do so. So they are seeing like this pot that they could actually access in order to save themselves and their jobs, basically, because there are not enough resources for environment because the natural capital has not been seen as a potential economical activity within those countries. So it's a legal framework assessment, not a consultation process. Thank you.
Thank you very much. We had a last question over here, and then we'll turn back to the panelists. Yeah.
Thanks. Dan Zarin, Climate and Land Use Alliance. It's a question for Jan. In the graphic that you put up, it illustrates and you articulated the sort of at least conceptual desire for a linkage between red finance and sustainable supply chains and I guess in the manifestation you gave it as a means essentially to get suppliers to the roundtable processes financed to the level where they could be certified for the roundtables. In looking at that, it strikes me that a couple of observations, and then I'd be interested in your comments. One is that doing so at the scale at which it would be really impactful is a substantial investment. And this session has the title of Looking to Durban and Beyond. I think it's reasonable to say that you're not going to find that at Durban. The notion that there is a kind of large centralized pool of international money that could find its way to something like that appears to be unrealistic. However, if you look at the direction in which the bulk of red finance seems to be moving now, it is largely moving in bilateral spaces, focused on a number of countries, including some of the largest participants in these supply chains for the roundtables. Brazil and Indonesia would be two of the most important ones. And so it would appear that there's a missing piece of your graphic, which is the role of national governments in the arrangements that you are looking to support. Just as we were talking this morning about the role of tenure and community forests in red readiness kinds of plans and finance, I'm wondering if there is a space that you and your colleagues have conceptualized and have gotten to work on the role of the intersection between the roundtables and governments as a means to utilize this avenue for achieving those.
I believe and this isn't the case in many, many places, there has to be a distinction between commercial forestry and protected forests and conservation forests. And the commercial forests are managed for yield to provide the wood products that people need and use every day. And it's because those intensely managed commercial forests exist that should take pressure off the natural forest and the conservation forest. And until you get a well-established commercial forest industry, you're going to continue to have pressure on the natural forest that you're trying to conserve. In areas where we have very well-developed commercial forest industries, there's been an increase in forest coverage. So, and U.S. and Europe are good examples. There's thriving forest industries. There's land that's managed intensively to produce forest products, and that frees up and allows governments and peoples to protect larger areas of commercial, or sorry, protected forest. And I don't see how else you can accomplish that.
Okay, thank you. Yeah, Dan's question.
Yeah, thanks for asking the question, because the graph just flashed by, I think, too quickly to go into all the detail. Basically, the commodity roundtables were set up to fill a governance gap, which is either local, provincial, global, or national, to basically talk to producers that were not meeting certain sustainability standards, and to resolve that through the power of money. Consumer is king, and I've already mentioned this supply versus demand-driven thing. Yes, there is a link between what needs to be done at the national or jurisdictional level and in the supply chains, and I think we have an opportunity now, having experience in, say, jurisdictional approaches which have, as I've observed them, at least in the agricultural field, to be still quite theoretical. Not enough of the pledged money is actually reaching the land users on the ground, whether they're forest managers or farmers. We've set up a system that actually scrutinizes the performance of farmers, assures that they don't cut down trees, that they sequester carbon, that they use their inputs wisely. And we would like to link that to jurisdictional approaches that would set a level playing field for everybody in that jurisdiction. And that comes with dilemmas that, say, non-commercial farmers' rights, or the lack of formalized rights. What kind of role would they play? What kind of payments would they deserve compared to their commercial farmer neighbor that can show that he has requested so many tons of carbon? But I think the roundtables provide an instrument, hardware, so to say, to actually reach out to hundreds or thousands of farmers. I don't expect Durban to come up with so much money that every single farmer, every single responsible farmer in the world can become certified or can become compliant with the standard. But the fact that RSPO has now 10% market share under the RSPO certification in barely 3 years' time is quite a feat if you compare that with, for example, sustainable coffee or sustainable timber under FSC. And RSPO is not an easy scheme. It has 100 criteria, it has a full multi-stakeholder board, even more complicated than FSC. But it's powerful drivers like the big Malaysian palm oil companies and big buyers like Unilever that kind of have pushed for scale. And the same thing, an order of magnitude bigger, is happening in soy and hopefully also in beef. And those three crops are probably the biggest threats to tropical forests globally. So I think if we build an alliance, not just of affected communities and cash-strapped environment and forestry ministries to kind of make use of red money, but to get global supply chains and powerful local agricultural government institutions as well as producers on board, then you have the right consortium to think about a jurisdictional approach that would actually mitigate climate change. If you leave out the farmers, if you leave out agriculture in that equation, I think the red money is going to be down the drain, because it will not be affecting the power that actually makes the land use decisions on the local level. Not in Brazil, not in Indonesia, not in Africa.
Okay. Organizers have said that we'll have to finish here, so please join me in thanking our outstanding panelists.
So I have the an enviable task of trying to reflect on today's conversation, which was very rich, of course, and do it in 5 minutes. First, there's a disclaimer: this is not the policy of RRI. These are just Michael's reflections. But I think there are a couple of things we can all agree on. One is there was a sense that climate change has really brought back to the fore forest issues and rights issues, frankly. And that we have a RED today that is either seen as an opportunity or a solution or a problem, but that it is still obviously in a building stage. We're still at 1.0. I also wanted to clarify that we intermittently today talked about RED and RED Plus, and then we're talking about agriculture, which is RED Plus Plus. But I put them all together in the same category, although they are different instruments that we've got to make sure we understand that difference. But when I think about what came out of today, again, I mentioned earlier that I think about this sort of graphically like assembling a puzzle. And here are the pieces of the puzzle that I think I heard there was some consensus around here in the room. The first is that rights should be in the center of RED as it is designed. And Macedonio was talking about forests as not only supermarkets but hardware stores for these local communities, and that's a very rich way of thinking about the roles that forests play to local communities. And it was also striking to me that we were talking about, and I think this was Don that was saying, think about indigenous knowledge as an asset class in a sense, and that it really is. When an investor thinks about it, we should think about all of that indigenous knowledge as really a risk reduction element that investor needs to recognize. And there's some very creative stuff that's happening in the state of Acre right now in Brazil, doing exactly that. Can you actually quantify what indigenous knowledge means so that there's a value to it when we think about it going forward? So rights sits in the middle of that of a RED going forward. There's obviously a need to alignment. We've heard about projects at the community level. We've heard about the need to connect those to the subnational level where you might have greater accountability. Obviously the national level so you don't have regulatory schemes that are working against that. And then of course we've got the golden goose, which is if we could come up with a global framework around climate. But in any case, we need to think about that alignment. Whether you're a warehouser, whether you're a Forest Trends, whether you're any kind of organization involved in this. And it's a very deep, complicated set of things to be thinking about. There's, as our friend from DRC was saying, there's a tremendous amount of capacity that needs to be built. All of this, of course, part of the dilemma, we've got a lot of work to do, but we're in the face of an urgent matter. I mean, if we really believe in what the scientists are telling us about climate change, a lot of us are going to be underwater in 50 years if we don't get this right. So there's an urgency for action, and yet there's a need to make sure that we do it well. Another point that I think we heard some on this last panel that is quite important is that we need to be able to link up these instruments of RED to really the drivers of deforestation. So obviously agriculture, a huge driver. I think on the horizon after agriculture, we need to really start to pay attention to energy, oil and gas, and mining industries that are not at the table like the commodities are at the table. So we need to start to generate that kind of linkage with other drivers of deforestation. we started this conference, and this is something that I believe in very strongly. We don't have enough public finance to solve this problem. We're not going to be able to say, okay, let's get DFID to throw all their money to solve this problem. We need to be able to find ways to leverage public investment in this with the larger scale private finance that's going to come along, that's going to make these investments, these instruments, sustainable over a long period of time. So we need to be thinking about leveraging when we're thinking about the way forward with RED. That leads us obviously to kind of unusual partners. So we within RRI are focused on making sure that the voices of communities are heard. We need to make sure that those voices are linking up with the investment people. We need to make sure that they're linking up with the Unilevers and the businesses that are out there that are also drivers of change. So we've got to, all of us in our own capacities, look for building these unusual partnerships. Our best friends need to be people that have not been our best friends in the past. There also, this was an item that I think is really important. We need to think about smart instruments. We need to be able to reach scale. We've got to roll up. We've got to have instruments that roll up, aggregate, as the commodity roundtable is an example of. We need to not only think about kind of delivery mechanisms that are portfolios, but also the conundrum we have around all of the need for measurement and monitoring. We need to have smarter ways to do that. Otherwise, we're never going to get there. We've created very complex systems that really are not very practical in terms of the measuring and the monitoring. And then I would say, finally, we heard again in the last panel and throughout the day, information. When you think about emerging markets or emerging whatever we want to call them, information is king in these early days. So we need to be able to level that playing field, as we say, across, so communities in the DRC have the same information. Communities in Peru have the same information as the carbon traders that sit in London and New York. So creating that information, making it transparent so we all have access to that same information is going to be really fundamental. Those, in my mind, are sort of pieces of a puzzle that becomes maybe RED 2.0, as we've been talking about. And I think if we can build a consensus like that, I think we can move away from much of the conflict and criticism that we have experienced in the first phase of RED so far. Andy also asked me to kind of really talk about practical next steps forward. What have we heard? What can we do? And so I think about scalable investment opportunities for whoever is out there, DFID and others that are thinking about this. The first is that, obviously indigenous peoples have played an incredibly important and central role in forest stewardship historically. They still play that role. It's not only because they're kind and gentle and whatever, but it's a significant part of the forest map globally. So we need to be able to build an instrument that in a sense supports that kind of work, those kinds of indigenous peoples that don't fit very nicely into the CDM and all these other instruments that we've created. So I would propose that we create a separate fund that is a significant fund that invests in indigenous peoples and the role they play in stewarding forests as a part of RED 2.0. We also, we heard from Yam in the commodity roundtables, we need to invest in instruments that are aggregating instruments. The beauty of that instrument, and he didn't mention it, but if we get it right with those commodity roundtables, and it's a relatively small investment. This is who manages the world's forest, and all of this was sort of data that had never been aggregated together that pointed to the role of indigenous peoples. I think we are ready to do who owns the world's forest carbon, and use that as a launching pad into an investment, a major investment into clarifying carbon rights, forest rights. I mean, I think instead of always talking about it as a real obstacle, let's go out and try to systematically address that. I think that would be a foundational piece to the success of RED 2.0. Tracking forest finance, just plug what we're doing, Forest Trends. I think it's really important that we have data that everybody works on, so we're not talking about this experience over here or that experience, but we have a common set of data on which we can all be talking about the efficiency, where the flows of money are going, help us understand how we can refine those flows as we go forward. There was also some discussion about the instruments that are out there right now that would be really valuable, not only to learn lessons from, because I'm tired of lessons learning. I want to really link them in. I want to align them. So you've got the FLEGT process going on, and everybody says you can't have red without flag. That's true. There's a continuum of ownership that you need there. There's also a tremendous amount of learning, and there's a tremendous amount of activity going on with payments for ecosystem services more broadly. That has not been really mined very well when we think about all of the challenges we're having with RED. We always try to reinvent everything. I think there's some tremendous alignment that can be done there that would be useful. And then the last thing that I would point out is, you know, when we think about the public finance that we have now, when we think about the voluntary market space and the regulatory market space, we're only going to get there if we can really start to create those instruments that allow us to align the public and private sector investments when we get there. So I think hopefully everybody would agree that it's critical that we start investing in really what that looks like. We need to be talking to the private sector when we say, when you think of risk, what do you think about? We need to be designing instruments that help them address those risks so that they can move into these spaces with us as we go forward on that. So that is maybe the broad outlines from my view of what RED 2.0 could look like. And then I just want to quickly, before we close it up, I want to thank Jeff and Andy. I know this is a really hard thing to do, to put conferences like this together. We do a lot of them, and they're always moving parts, but you guys pulled it off beautifully. Thank you very much.
Well, thank you very much, Michael, for that excellent little wrap-up. And thank all of you for your patience and participation today. I think it's been a great day. I think we did what we set out to do, kind of took stock of the markets and the public finance. We took stock of what's happening on the ground. And then we also discussed kind of some new ideas or new positive possibilities for moving ahead. So I was reminded, as Michael was speaking, of, I think it's Deng Xiaoping, who said, I don't care if the cat's a white cat or a red cat, as long as it catches the mouse. So if the big idea, the global carbon market, is not going to generate the money and achieve what we'd aspired it to do, then it's time for us to quickly shift gears and come up with some new ideas and put our energies behind them. So, and I think we saw that kind of energy and that kind of set of ideas today. Thank you to the translators who are back there working very hard for us. Thank you to our colleagues who were visited us via Skype or the internet. That was wonderful to have them kind of zoomed in on us. And a couple little announcements before I close, and that is there's some feedback forms. They were either handed to you this morning or they're somewhere available, maybe back. Do you know where they are, Jeff? They're back there. Well, somewhere back there, there's feedback forms. If you can find them, please let us know what you think, because that's how we try to improve what we're doing. I want to thank all of the chairs. We had great chairs today. France did a great job this morning, Jan, and then Peter this afternoon. Thank you very much. And then all of the panelists. We have to also leave your badges in the back, these little badges that have your name tags. Can't forget that. Also, I was remiss. I was supposed to announce that there's a new Global Witness report that's back there, the annual transparency report just come out, kind of the second year they've done this. Very good. Please pick that up. And then, lastly, some of you are not yet done with work. Some of you still have more to do. Some of you have been invited by Martin Horwood, the Member of Parliament, to go over to report to him and his colleagues at the Houses of Commons. That little session starts in about a half an hour. So if you have received an invitation from Martin Horwood, then it's time for us to leave. So there will be people who guide you over there, and it'll take quite a while for you to get through security. So if you've received an invitation, think you know who you are, then we'll have to get up and head right over there. So with that, I'd like to close and say thank you all very much. It's been a pleasure to be with you today.